So what's happening, the good actors, bad actors, as I was talking about, Adam Smith, his principles, you need justice, peace, and the justice hopefully can take place for these bad actors in the space, and the regulation should help. So going down the future of the space, growth into maturity. Like I said, that word maturity, what even is maturity for something we don't know or see? Future Fed coin, the central bank digital currency, is that going to be a thing? How will that take place? Are they just going to give us money for the stuff we need, or who knows? ETH 2.0, the rolling updates should be great. I'm looking forward to seeing that evolve. And then mainstream adoption, we're seeing debit cards and credit cards already, savings accounts and IRAs. Inclusion into your portfolio, maybe. Depends on the portfolio, depends on who you are. And maybe you just want to invest on the side, but actually have your full portfolio without any digital currencies. And so touching on the portfolio, I want to touch a little bit on digital asset portfolio management. Man, there's just so much to talk about. And fortunately, you can never run out of topics on this, but this is one of the most important things I think I kind of wanted to touch on. So digital asset portfolio management, you want to look at your time range. There, you're going to be aggressive, conservative, moderate. At what time points in your time range are you going to be doing either of those? Will you stay in regulated markets as we see? Larissa.com. I'm not too sure what that one is. Is that one of those like news sites that you were talking about? But are you going to stay in the regulated markets? Regulated meaning US, and because there's a lot of sketchy actors. Laura, yeah, IRA for crypto. I think I saw their commercial actually. So yeah, staying in regulated markets is a key one, because there's people that promise like a 40% return with their savings account, but they'll only let you pull out like 5% of your money in a day, and a lot of those time you won't get your money. There's a lot of scams, unfortunately. So yeah, are you going to stay in these regulated markets? End goal, what are you trying to achieve? Do you want $100,000 in 2 years, or do you want $1 million in 5 years? You want alpha? Yeah, we all want alpha. Portfolio examples. So for the examples that I'm about to show, I'm going to touch on Bitcoin, the digital gold, Ethereum, the use for future applications, such as NFTs and other things, stable coins, which return a solid 7% to 16% year returns. And I mean, like I said, sometimes they offer 40%, but those aren't regulated in any way, shape, or form. And you don't even know who those actors are. So it's best to stay away from those. Most of the time, there are a lot of scams. And then ICO gambles, literal lottery tickets. I consider ICOs, especially off Binance. Here's a little quick story. My friend and I were trading on this platform called Binance, and it actually got outlawed in the United States at one point. I had left. I was doing this in maybe like late 2017. Took a break from it for school, fall, and then Binance is now with FCX. Yeah, I know they have Binance US, but I was with like the Binance, the one that wasn't regulated, and then I got out because it was just summertime, just doing little trades here and there, trading. And then unfortunately, my friend, he hopped in a little later and he started doing it, but then the account got locked and he can't pull out his money. He's trying to get his money back. He's telling him that he's a Mexican citizen and all this other. It is a funny story. Jared's a little goofball, but unfortunately, he lost some money. So yeah, I mean, these aren't regulated markets. At any time you could be locked out of your account, and you could say goodbye to all your money, which is pretty sad. In the case of Jared. So here's some examples that I came up with. Here's a conservative portfolio, blocking out these ICOs, not wanting to put anything into those coins that just come out. Because if I'm being honest, a lot of these coins are just trading off momentum in the name and the actors that are in them, unfortunately. They're just a lot of pump and dumps. You really don't want that if you're wanting a long-term portfolio. Stable coins, we see that 8% from Gemini, unfortunately slashed to 6%. But I know BlockFi has other stuff on there for 8%. And these are regulated within the United States, not fully, of course, but they're being transparent with the governmental actors. So I think that'd be a great one. Here's Bitcoin coming in at 30 and ETH coming in at 20. Here's a little more moderate one. I'd say this is kind of sort of what I have. Give or take a few percentage points. Bitcoin coming in at 35, stable coins coming in at 30, and then Ethereum coming in at 25 with ICOs at 10. Obviously, ICOs aren't just what are the actual stable coins? Stable coins meaning like Tether, staking these coins into a savings account, like the Gemini one that I was talking about, the GUSD or the USDC, or even the Tether coin. I mean, if you want to play around with some of those other coins that aren't necessarily on a lot of the US exchanges, but the foreign exchanges, you're more than welcome to. But just like I said, regulation isn't transparent in these times, so you can get locked out of your account and lose a lot of money. And maybe you'll see it 10 years from now, but maybe you won't see it for the rest of your life. But I mean, I'm assuming you're in college. You are in college, and maybe you're not 30 yet with kids. Maybe you just have like $1,000 or $2,000 that you want to play with, depending on how big that is to you. But the thing is, what do you want to calculate your expected return and where else you could put that money to good use for in something more secure like the United States markets. But yeah, so moderate here. I like this a lot. It gives you a little exposure to a lot of these aggressive 10x stocks, Bank of America, stable coins. There's no way. Is that really the rate? I don't believe that. Yeah, ETH being a little bit more aggressive. I think we'll see great things. Close enough. So yeah, here's a lot more aggressive one. Gosh, I don't know them personally, but I see them online and they actually have portfolios like this, unfortunately. 60%, like I'd probably say a big portion of theirs. I don't know where they're based, so maybe it's regulated in theirs, but they're doing a lot of gambles. And I mean, they're online, so you don't know if they're faking their new house with their or anything. But I've been following, it's called Crypto Twitter, for a few years, and they have a lot of actors on there who give some great advice, good shout outs. It just depends on who you follow. You can follow a person who is really intelligent doing their technical research, or you can just follow somebody who's yelling out a coin because they saw it on a web page. So yeah, so a portfolio example, some advice, stay on top of your portfolios. Everyday management can lead to migraines and headaches and daily heartbeats of 200 plus. I know I went through a little anxiety attack one time, especially way back when I was looking at this stuff every day, and lots of rug pulling and shilling. Yes, lots of shilling, and that's unfortunate. But yeah, plan what you want to aspire to have and stick to it. I mean, obviously, if you need to deviate, you're more than welcome to, but try to stick to a plan. And never put all your eggs into one basket, meaning don't go full crypto. You're going to need exposure to bonds and just like a normal portfolio. And obviously, this isn't portfolio management advice. This is just like little examples that I threw together. And then looking at some tail end events, I know Bitcoin, its biggest loss was in 2017 So I'm gonna call it a modern day, because anything before 2017, I think was just like you had to be in really, really early. And those days were literally Wild West days with lots of fluctuations and just crazy management within the space. I wouldn't even call it a space at the point. It is literally just a room. So yeah, these events are actually possible. In 2020, we saw a 50 day event, and that today would probably bring our price down to like 17. In 2021, we had a 53% day. These are single day events as well. This isn't weekly, this isn't yearly, this is a single day event. In 2021, we lost 53%. Today, that'd probably be around 18, 17, 9, something like that. And if the largest single day event were to happen today, as of maybe 30, 40 minutes ago, when I was just calculating it to get a more accurate point, your loss would be 34,000 for one coin, with the net remaining bringing the price down to 6.5, which is pretty sad, going down from 40 to 6. But yeah, and then just here's some more examples. 30% day. A 30% day, I'm not going to say isn't crazy, but because it definitely is, but those are more often than the 50s, obviously. But those are those tail end events that you must think about, especially when including into your portfolio. Those tail day events happen crazy often on those ICOs. I know coins will go up like 120% in 2 days, literally, if not a day. And then literally within a year, they'll be down negative 100%. They'll just literally go to nothing, and then they'll stop even trading on the platform that you bought it on, which is pretty sad, because they tell you to buy this and then they just pull it directly from the exchange. I don't even know how you would sell that at that point. They would probably just tell you to send it to a different address, but you wouldn't be able to buy it from there anymore. That's for sure. You can probably sell it, but you wouldn't be able to buy it from there. Which I don't know why they do that. It's just a lot of scamming, unfortunately. So a little advice from a seasoned investor. I wouldn't call myself a trader. That was way back when. But I definitely do. I got my parents into crypto. I didn't tell them to stop their IRAs or their Roths or their 401ks or anything, but I told them to put a little money aside each week and try to put it into these Bitcoin, this Ethereum. I wish they would have listened to me in 2017. That would have been nice. That would have been crazy good returns, but unfortunately they thought I was full of poop. So some advice: stay in the regulated markets, especially if you want a long-term. Watch the lawmakers closely. You're going to be seeing, hopefully this year, some good legislation come from that executive order. Dealing with ICOs, don't be the last one holding them, because like I said, if you're trading, a lot of these are going to be scams. And they obviously don't trade a lot, but when they do, the volume pumps. Yeah, give it a breather every now and then. Don't end up having a crazy anxiety attack like I did one day. It was not fun. Really scared, probably 200 plus heartbeat. And does it always go up? Probably not. It definitely doesn't. You got to think realistically. As we see, historical returns aren't a measure for future returns, but they do give a good insight. What is your take on ApeCoin? That's a ApeCoin. So I think ApeCoin came out during spring break. It started trading on Gemini at least during spring break. And I would say ApeCoin is, so just some future reference or some past reference. We saw Dogecoin. Yeah, backed by Blue Chip. We saw Dogecoin develop from nothing as a literal meme coin. So this coin was made as a joke. They ended up sending the Jamaican bobsled team to the Winter Olympics. And and then they end up getting backed by Elon Musk. And that shot the price up quite a few points. I want to say, gosh, let's actually take a look at that. But yeah, so talking about ApeCoin, they have the NFT, Doge. They have the NFT, ranked number 11 right now. 7-day. Let's look at the year to date. So yeah, let's not look at that. Since 2020. I was actually trading Dogecoin on Binance around summer 2018. Yeah, that would have been a great. Fortunately, sold everything. But yeah, I mean, as you could see, Dogecoin was a big meme. It shot up to almost 7 cents, and now it's down to penny. So I don't know. I don't know much about penny stocks, but if I were to assume, kind of sort of the same thing, maybe. Yeah, incredibly speculative, pumped by Musk. I would definitely agree, pumped by Musk, and he's still pumping. I know for Easter he put up a thing. He put a dog, the Shibu dog, this dog here that's on the coin, next to a bunch of eggs. And on the eggs, they had this exact logo, the Dogecoin logo. So let's see if it shot up on Sunday, the 17th. No, not too much of a pump, but it actually fell quite a few. But yeah, and if I'm going back off of that, I know ApeCoin actually has legitimacy, because if you look at it, they have the NFT. The NFTs trading for, some of the NFTs are trading for millions of dollars. And if these are trading for millions of dollars, and they create a coin, then all the power to them. Whether it's going to have actual use in the future, who knows? I really hope to see something along the lines that does have use in the future. I'm tired of just seeing the space not truly fully developed. And hopefully there's people out there that do. Besides the NFT is the people in the community that want a ROI to invest it to let the project fail. I would definitely say so. And that's the case for me with the Gemini US dollar. I'm going to use the Gemini US dollar, my savings account, and have that card linked to my savings account. And they actually have those discounts, like 5% discounts. I was kind of logged in on that one. I was logged in on that one.
Oh, sorry.
No, you're fine. You're fine.
Are you still using it?
No, it's fine. I'll just go to
Sorry, it was logged out. So.
Oh, was it?
Yes.
Okay, I thought I just put it on sleep. No, you're fine. You're fine. You're fine. Okay. Discounts. Yeah. So actually, let me pull it up. On Gemini, I know with the card, like Regal Movie Theater, I'm not sure if you want to go see Morbius or something, but if you have the card, you can go there and you can get like a 5% discount on that. Just using their card, using their GUSD. And all you have to do is link it. So with the card, if you have Bitcoin into the wallet, all you have to do is link your Bitcoin wallet to the card and you'll be fine. Or you can unlink your wallet and go to your actual US dollar and you'll be fine there. But yeah, here's a little bit of what it looks like. So you can they have Baskin Robbins, Barnes and Nobles, Bed Bath and Beyond, just a bunch of stuff. GameStop, Regal Movie Theaters, Ulta Beauty. They don't have too much of a selection at the time, but they have about like 2, 4, 6, 8, 10, probably around like 15, 20 different merchants that you can choose from. But they give you can shop there and they can give you discounts. And that's just going back to the Cash App card that I talked about at the beginning of this semester. 5% back. Well, I believe they still do. I know I went to Austin one time with a bunch of friends and I just said, hey, just Cash App me. it's like an easy way to Venmo. Yeah. Let's see. Let's see what kind of boost they got right now. They have a. Wow, I don't think they. Oh look, yeah, 5% worth Bitcoin in at any restaurant, with a maximum of $5. So, yeah, there you go. But that's gonna be all for this semester. Again, thank you, Jay. I really do appreciate having some people come to the class. Besides Mr. Sweet getting my ear full. But yeah, if you want to connect with me on LinkedIn, you can just type in Jacob Resendez, UTSA, or I'll type it in right here.
It's the reason when you load it, it takes so long to load. It's trying to do all those formulas and just millions of them. All right, so we got a firm that's very stable, average debt. I can't remember what we did on the rolling beta. Did we finally decide on the beta last time? Did we talk about the beta last time? I think you picked one.
Yeah, I think we did too.
Do you have another file? The evaluations, where we get the evaluation?
This is it.
Done any evaluation yet? Not at all.
I feel like we did start it, but I need to find the, yeah.
Wrong beta, right?
Mhm.
Yeah, I think you did that one.
Oh, here it is. I found it. Okay. Is it on?
Oh,
the
that's
main
it, yeah.
Okay.
Right, so yeah, there's that screen. That's at the top of the beta.
Mhm. Is it on
It's
right
on there,
now?
but it's not.
Oh, okay. Oh, I see. You have it now? Okay.
First read is the current treasury, which is probably even higher today. I think we're over 2 point, maybe like 2.85. Yeah, we're getting close to 3% again. I wonder if we actually hit 3, so 2.86 now.
Should I change that here
That's good. That works.
to 2.86?
86, yeah. Dividend zero, earnings. Okay, we got everything. So we still need to do short-term growth. All right, remember on the paper, the 3 approaches we had, that we haven't done those 3 approaches yet? We haven't done PEG and.
No, we have
All
not.
right, so let's off on the side, let's start with the PEG approach. Remember for paper 3, their current PEG ratio is, oh man, so really. Current PEG ratio is 2.75. And the current forward PE is 29.69.
What was it?
29.67.
Okay.
And so their growth there would be the 29 divided by the 2, so a little over 10%. And about 11%. All right, there's one approach. Let's try a second approach. For the second approach is kind of a traditional view where their growth is their return on equity times How many times their retention? Now, you might need to look at a few years of data. Current numbers, and while we're doing that, I'm gonna bring use capital IQ here before.
I don't think we used it in here. I've used it for my papers though.
I'm bring up capital IQ while you're doing that, and I can share my screen. So let me find it real quickly. Because capital IQ is a really good one to use on this paper. You know, you can pull it, from home and use it as long as you log in.
Use the capital key through the library. Is it just our UTSA login, like our original?
Yeah, as long as it's your .edu or UTSA.edu. All right, I'm gonna bring Abbott Labs in. Bringing up financials. So the current numbers, return on equity is 20.49%. And they're, right, so you have to add a line for payout, or
Okay.
retention. Payout and retention, either way. The payout is 45.69%. And that means the retention is 1 minus that. Plus 1 minus that. I think I want Zoom and what's my machine. Zoom is- So that means their growth is going to be their ROE times their retention. It's going to be real close to what you got above. So you're going to have a firm that you're going to have some good confidence in your numbers. No. The 54% times at 10.87. No, wait. Oh no, you're right. You got it
Yeah,
right.
times-
I'm
okay.
sorry. All right. So that's real close to what you already got, and that's pretty amazing. And then the last thing we can look at. Let me share, and then I can send this to you afterwards.
Okay. How do I do that?
So just stop sharing. Labs up here from Capital IQ. So there's a few things I like to do here. Windows in here. This is something you can definitely do from home, but what I like to do is just say, let's look at 3-year, 5-year, just out of curiosity, 10-year. So remember the 3-year, you take today divided by 1, 2, 3, 4. Is 1 divided by 3 minus 1. Remember that because in 3 growth periods, so you need a starting year and an ending year. So you go back 4, and it gives you 12%. So I don't think saying they're going to grow 10 or 11% seems that unusual because they've grown 12% for the last few years. The 5-year, you take this last year divided by 1, 2, 3, 4, 5, 6. Raise that to 1/5 minus 1. 15%. We know COVID's probably affecting this some, but that's okay. In the 10-year, we take today divided by 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Raise that 1/10 minus 1, and that's 7%. So that's revenue growth. You can also do is look at net income growth. 44, 38, and 4. That's where the COVID is really affecting.
Mhm.
You're going to project them to grow 44. You're just trying to see if that 10, 11% is a reasonable number. I'm going to look at the EPS growth, and that's also very high. fully diluted EPS, very high. So from your paper, you can say, okay, the PEG ratio and the sustainable growth model both show growth in the 10 to 11% growth. They've grown really fast the last 3 and 5 years because of COVID, because of what they're doing with testing. I don't think it's, you could say, I don't think it's reasonable to assume this firm could grow 10 to 11% in the next few years. That's why you use all this data to help you with. The other thing we want to look at is I'm going to go to their key stats. And all I want to do here is I want to find ROE, and it's not in there, so let me find a page with ROE on it. Thank you. Yeah. You just one button, you click one button and it brings it all in. It's got ROE. Ratios out here. Okay. The reason I want to look at the ROE is just to make sure the ROE we're using, that 20%, just isn't a real unusual number because of COVID. It looks like it could be, right?
Mhm.
If you look at that 20 is really the highest number they had. So that's a little bit of a caveat. I put this in the notes that their ROE the last, and we can even look at the average the last 5 years. And the median. So if you take 11% times that 50, you're only getting about a 5 or 6% growth. So save this file and send it to you, but you know that's the kind of thing you want to bring into your paper. So you could probably justify 10 to 11%. This is a company that you're going to have to really, when you get the growth rates, you're going to have to make a point. This is a firm that was definitely benefited from COVID.
Mhm.
No question about it. The one last thing we could do, let me save this thing. Last thing, and let's see if this showed, hopefully it showed my Bloomberg. When Bloomberg any chance?
No, that's your screen, but I can pull it
I
up.
mean, well, here, I'll go ahead and do it here. I'll just show you how. So I'll show it to you. So when Bloomberg comes up, is it showing Bloomberg now?
Mhm.
Okay. So if I do ABT equity, you know, the F8 function, and type EE.
Mhm.
So the EE function, and when the EE function comes up, I'm going to change it to annuals. Annuals, you can type this in Excel. They're showing their 2025 earnings per share to be 6.1175. So put that in that growth part of your Excel. Type 61175, and then their current earnings is 5.21, right? So I'm going to send it back to you. Stop. I can give you those numbers again.
Okay.
So that's one last growth number we can do. So we got the history. You'll have that from the capital IQ file. You can bring that into your paper. You could probably even do a chart of that if you wanted to. Even a bar chart just showing history. That'd be real powerful in the paper.
So Bloomberg gave like 6.12, something like that, right?
Yeah, it's their 2025 is 6.1175.
Okay.
Go ahead and share your Excel.
Oh. Okay.
So Bloomberg, you might want to say that's their 2025 EPS.
Oh, okay.
We'll calculate growth off of these numbers. And then their 2021 is 5.0941. Take for your growth, go down one extra row. parentheses, but I mean equal open parentheses. You click on the 61175 divided by the 50941 close parentheses, and raise that to the open parentheses. 1 divided by 4 close parentheses minus 1. Yeah, that's a much lower number. So
I think it will lower because rapid testing's probably decreasing
Yeah,
a lot.
they're probably thinking, because 2021 really stands out. You can just see it in the chart, it just shoots up there. They're probably thinking, I mean, that's pretty good growth of such a great year like 2021. They still expect it to grow about 5%. So if I were you on the paper, I might run some scenarios.
Mhm.
So it looks like a short-term growth. Let's take, you know, the ROE, the median ROE of 11%. It would probably give you about a 5% growth, and Bloomberg's telling you about 5. So your growth rate could be as low as 5 and as high as 11. I think I would use that range. So we'll see. Why don't you start with 11, and then we'll try. You can really justify those two numbers.
Mhm.
It really comes down to, you know, the COVID radically changed them. And I really do think they've got some stuff that's going to continue to benefit. I think they proved themselves in COVID, and I think that's going to benefit them. So I think the higher growth rate could be possible. It is pretty aggressive though. All right, so let's start with 11. So in your short-term growth in column I, let's start with 11% there. Long-term growth, it's just what we think the economy is going to grow. Let's just start with 5% there. And then the H, so this is the tough one. I think what they're doing is great. I'm really impressed with the CEO. I love listening to that. To me, a 5 is a really aggressive H. So I think your H, you know, 2.5 to 3 is, but let's try 2.5. You can come back. That's the hardest thing of all is the H. Not 2.5, not 2.5%. It's 2.5. It's in years. It's going to give us a good comment. Inflation, let's just say 2% on inflation. So you ready to value? So given discount model first. Y'all remember this from the class, right? We did it today. D1. Can you do it from memory?
I hope so. Let's see. Times.
Oh, so you want long-term growth on this one. All right, let's see what we get. So we get a number that's even in the ballpark. We got 149. They're trading for 116. That doesn't seem too unreasonable.
Mhm.
All right. And the cap earnings. This one was almost identical. You just use earnings instead of dividends, and you use inflation instead of growth, but everything else is identical.
Times 1 plus inflation?
Yeah, the times. Make sure you get the times in there.
The long-term growth, can we take that from the first part of our paper?
Yeah.
Okay.
All the students, they don't change. I mean, you want to think a little bit about it. It's just, if you got a big solid firm, it's probably not going to grow quite as fast as the economy because all these small companies are coming up. So we might change for long-term growth in the 4, but we'll see. All right.
Is that correct?
You should get a lower number here. We hope.
Yeah, it was
Makes a little
93.
easier. All right, that's good.
94.
That's kind of the value of them if they just stop what they're doing and just stick with it. All right, and then the H model. This one, I don't think it's that hard to remember. but y'all haven't seen it that many times. So. That's a good way to do it, yep. And you already got built. I'm gonna add one extra parentheses at the very beginning there. Good, that's the way to do it.
I don't.
Plus the dividend is the age. Twice. Yep, you got it. 70. All right, you just change all those to dollar amounts. Thing I don't like is the long-term growth. I think you should try that back to 4%.
Okay.
That gives you something below. So, it's somewhere, you're going to decide on these. You see what you come up with paper 3 for long-term growth. If you come up with 5%, I'm going to be somewhere in the 4 to 5% range. This firm's not going to grow faster than that. Because ultimately, a firm like this, when they're real big, the most they can grow is population growth plus inflation. That's all they can do because they've already done everything they can do. Maybe they get a little bit of baby boomers or something going for them, but eventually the population of the world stops growing and they're not. They just, the population growth like 1%, inflation 2%. They're not going to grow real fast. All right, so now change your short-term growth to 5 and see how big of a deal that makes. 5%, sorry. So, all right, so that would make it not a 5. So it really does come down to that long-term growth. That's the most important thing that you've got to assume. So again, you can run scenarios. You could do your long-term growth between 4 and 5%. So you could do 4, 4.5, and 5. 4.5 is probably going to get you right on where.
Yeah, let's try that. 4.5.
Yeah, but that almost gets you right where they are today. So long-term growth and put your short-term growth back to 11 with that 4.5. That gets you right on top of where they are right now. You get 123 versus 116. So you're probably going to be recommending a hold more than a buy, I would think, but you have to just run the numbers. But that's where this whole idea of a football chart comes. So how would you do a football chart? So what's a football chart? So if you can look them up, you just do stock football chart and you'll see them. There's actually YouTube that show you how to build them, but yeah, if you'd let me share screen and I'll show you some. Stocks. See it.
Oh, the one we seen the investments.
Yeah, it does look like what Anthony shows.
Yeah. So I don't know what you put in there, but I would try to get one of these in your paper because they become really popular. The ones I would recommend, you did your relative value ones. And if you look at the historical relative values, the 80% and 20th percentile, you might bring that in as a range. So maybe today they're trading at a PE relative of 1.2, but historically it's been 0.9, 1.3, then that can become your range. You just say, hey, what if your stock, if your stock was at a 0.9, you bring it down, that kind of thing. The second one might be these scenarios are just running. Your long-term growth between 4 and 5. Your short-term growth between whatever. You just do the ranges on that. And that would give you, they give you 5 or 6 different ones because you got the dividend discount model. You probably can't do it for the cap earnings model. I mean, you could try 1.5 to 2.5% inflation, but it's probably not going to do that much work. But that'll give you 4 or 5 lines, and then the 52-week high and low. And then I like the way this one does it, where they have the current price as a red line. And what you're hoping is the current price probably won't be above all of them or below all of them. But what you're hoping is a stock that the current price is kind of on the left side of all your ranges. So I want to try that. paper, I would certainly give you a lot of extra points for trying that, and it really does look good in your paper. It's very, very impressive. They did it on the CFA Research Challenge, and I think it's become almost standard in the CFA Research Challenge to do a football chart. I like this one better. It's a little cleaner looking. They have this current analyst forecast. You could do that as well. You could get that off of Bloomberg. For Abbott, that might be pretty good. The comparables is what we're talking about, the relative, but you can do a relative on EV to EBITDA and EV to revenue. And you just look at historically where they've been. You've got all the data right on that one spreadsheet. And I like to do like the 20th and 80th percentile. So the 20th percentile is EV to revenue 1.2. Right now they're 1.4, so their price would have to be $87 to make them 1.2.
So we would treat this like a retail company.
Well, what did we decide last time? Was it price to book? EV to, no, whichever two we talked about, I can't remember what we said. I think EV the revenue could work for this company. I think if you ran a model with this company, it might actually prefer EV to EBITDA. I mean, EV the revenue.
Okay.
But kind of look at it. If there's one that just gives you a really bizarre answer, you might kick that one out. Sometimes it's like I just don't have to explain it. It's so weird. That fourth one, precedent transactions value, which I don't even know what that is. I've never heard that before. PC valuation, you have multiple of those, so you can certainly do that. You have to do your own YouTube search, but if you do go into YouTube, actually search football chart stocks tutorial. It's like a 4-minute chart. We'll show you how to do it. A 4-minute video will show you how to do it.
Yeah, there's one from the CFI right there.
Yeah, that one I was talking about today. How to create a football chart. So it's really not that difficult. Essentially, it's a bar chart, but you have to have two pieces, and the first piece you just make all white. And so it's like it's this plus this. So the first piece is your minimum, and then the next piece adds up to your maximum, and you just get rid of the minimum as a white. So it's actually pretty easy to create. You can probably do it after watching the video. That be your paper. Any of that you put in your paper, right? Like give extra points for that kind of stuff that's not asked for in the actual, you know. But and if you get all that in there, this will look really good on LinkedIn. You can make it really, really impressive looking paper. Now, I think I'm planning on taking my security analysis class, but in that class we do a lot more of this kind of stuff. So it's essentially papers 3 and 4, which you spend the entire semester writing.
So are you teaching any classes in the summer?
No. Yeah, but they took that away.
I was planning on taking that class, the securities.
Yeah, it's a tough
valuation.
class. So if you're taking too many hours, I would recommend you don't working a lot of hours. But if you have some time, that class more than any other class I've taught has gotten people jobs. It's pretty amazing how many emails I've gotten from students who got a job because of the paper they wrote in that class. At the time, you're taking 12 hours or something, and not working a lot of hours. It's a really good class. Because you produce something that you can constantly use in interviews, even 2 or 3 years later. Yeah, it's so you have everything you need for paper 3. It's just writing up what you just did.
Right.
I'm going to email you the probably send it to Ross.food.
Yeah, Ross.UTSA. Yes, sir.
Brandon's, but I don't see you in there. No. Brandon Moore.
It should be, oh, the easiest one would be BAA.
Okay.
Yeah. Business. 17@gmail.com.
aabusiness17@gmail.com. So it's a great company. It doesn't look all that cheap, probably because of COVID. You got a company that definitely their stock price came up. I like great companies. I don't like them expensive, but I like great companies. I'm kind of sold on the company. The question might be, where do you buy? So if it falls below 100, $90 or something, maybe it becomes a really good buy. Certainly put that in there. So there's this idea of a target price. You want to put a strong buy on it, the upside potential might be pretty significant for a firm like this. You use that 5% growth rate, you're up in the 100, 160, 170. So it does have some upside. Its downside doesn't look that bad. So could say a weak buy or a hold. It might be a hold or buy if it falls below X. Those are the kind of things you can put in your last recommendation. Hardest part is like, what am I going to recommend now? Because you're going to get such a wide range. You're not getting a radically wide range on this firm like you would with Google, but much harder company to value. Good. All right, I learned a lot on this one.
Yeah. So like, I guess maybe I just need a little refresher. So are you just inferring H and long-term growth?
The long-term growth is
the
going to be
market.
the economy.
Yeah.
Every firm eventually is going to grow like the economy, probably a little slower. So I think the economy can grow about 5%. That's somewhat my high point on that. That's 2% productivity, 1% labor growth, 2% inflation. So that's
Okay.
5%. The H really is, you think they're going to grow, and like if you use the 5% for your short term, and your short term, long term, essentially the same number, the H doesn't matter. But if you use that 11% short term, then the question is, all right, they're growing really fast right now because of COVID. How long before they become just a normal company? Just grow fast. Very subjective. You just have to. It's creative writing. I would tend to be in the area of saying, I think COVID's changed things. Firms like Abbott, they proved their value. We could have another scare like this. Probably have some stuff and they're a very innovative firm too. I like that as well. So they've proven themselves in a crisis, which means the next crisis, they're going to be trusted. So I think this is a firm that has some good legs on it. 5-10 years of really good growth. It may be lumpy because of COVID, but I think this is the firm that really could get set on fire again. So I might give them an H. It's high. 5 is about as high as I've done like this. And 5 means 10 years of really good growth. That's a long time for a big company like this. But I'd probably be in the 2.5 to 5 range. And you could do that in your football chart. So you could do that 5% long term with a 2.5 and the 11 short term growth with a 5. Really wide range.
Sounds good. Thank you.
So, yeah, got to where you need it by the end of the semester.
Yeah. Yeah, rolling data. Valuation, I think. I don't know, I don't think we've done the valuation.
Yeah, so I had a sheet called valuation. What did we decide on the beta? I can't remember what part of it. It's going to be a low beta, right?
Yeah, it was low. This is an average. I don't know why. I forgot.
It's probably a little too hard. Point forward is about the lowest I would do on a firm like this. Again, the lower the beta, that you get these massive valuations. Between 0.4 yeah,
Okay.
especially with. All right, so you've never done valuation before, but let's try it.
Oh wait.
All right.
No. I think I know what you. This one. Is it?
The application when we're at working on as well.
Oh,
See it in the
not this.
document recovery, that one.
Oh, is that
So
one?
they do have really, really high debt. You can go higher. Can you bring that chart up again? Yeah, they're really, really high debt, but very, very, so
Mhm.
that's the one thing that definitely is going to push it to 0.4, maybe 0.5. Let's stick with 0.4. It's a really low beta, but
Okay.
all right. So somewhere at a valuation sheet,
Oh wait, I think it's this. Yeah.
however you want to do it.
Where is this? Right, cash flow.
Oh, we've already started. Okay. Ah, there we go. So you meant to increase your risk-free rate. Interest rates keep rising.
Yeah. Oh, really?
Whoa. Yeah, the 10 years up to 2.9%. So just since last week. You can do the market risk. All right, we got everything else. Okay. All right, we got dividend 0. All right, so we did evaluation already, right? That's what that 530 is, isn't it? Yeah, that's the dividend discount model. With the dividend discount model, there's something called a perpetual growth annuity.
Oh, I think you mentioned that.
Yeah,
In
so
the
perpetual growth annuity, you take the cash flow divided by the discount rate minus the growth rate. So that's essentially what it is. Works, it's a really good model, works really well. So 530 or a stock that's currently trading for 45. So yeah, that's really, really high. 4% growth. Try the beta up to 0.5 and see how material that is. It's definitely looking like a cheap stock. Valuation, you got both rich and cheap.
I think also
Looking back at the historical dividend, they've been paying a pretty substantial dividend for quite some time. It's not like they just, we could use the H model, but evaluation with this one, the H model, you need it only if you think you're going to have unusual growth period for the next few years. But unless you're that 4% growth, check out. I don't know if we looked at Bloomberg. I'm going to check out Bloomberg just to see. Something that maybe their earnings dropped this last year, but remember we had the issue of their dividend was greater than the earnings, but that was because the earnings dropped off. Yeah, you can get a number too. That would work.
I was into the company. They have I think the reason why they have such high dividends is because they also hold themselves as that company that is kind of like a giver. That's what I was reading like an analysis on them. They say that Clorox tends to give more than
They do what?
that they tend to like give more than they can handle sometimes. Which they were talking about risk and valuation.
Their debt is high. If they're borrowing money so they can pay dividends, that's certainly an issue. Clorox. IBE. Quarterly to annual. Yeah, Bloomberg definitely is showing that their 2021 earnings is a really high point. That's, you know, a lot of that's probably COVID related. They don't have dividends in here as a choice.
Could this be like maybe an opportunity for a company to invest in options? Maybe like in puts?
Options, what do you mean? Investor or?
Yeah, as an investor, so since Clorox is not projected to really rise, would you want to put like a put?
Well, you want to do puts if you think it's going to really sell up. So if anything, they're a cheap.
So since they're a cheap stock right
Call
now.
option, you think they may shoot up. If you think your valuation's wrong because you're using numbers from a really high point, and then we could definitely use the H model. Well, let me show you the H model. Go back to your evaluation. I'll show you the H model. How we use the H model relative to what they're doing.
I have a question about beta. So it's supposed to measure volatility, right?
Well, it measures what we call systematic risk.
I agree.
It's
Okay.
not really measuring volatility, but it's measuring the systematic. So firm have more exposure to the economy than the average firm. One, they're exactly like the typical firm.
Oh, okay.
So you're saying this is not sense that it's, you know, this is as a company. Because you have to read the theory. You can definitely go to Wikipedia and Investopedia. See it in every single finance class you take. You'll be ahead of else because you've already done it. Let's try the H model. I don't think it's going to have that much of an impact on our firm. For H model, we need two more numbers. We need a short-term growth rate. Here, this is what I want to show, what Bloomberg shows. So prime minus 2%. In fact, it's even more than that.
Or 70?
Yeah, try minus 15%. And so, and then you need an H. So the H says you expect them to grow 4% long term, but you expect them to actually shrink 15% in the next few years. H is asking how many years is going to be to get from 15% back to 4%. So looking at Bloomberg, it looks like about 6 years. So if it's 6 years, you want your H to be 3. Your H is half of whatever you think that period of time is. So let's use an H. Now we'll do the valuation, the H model valuation. Equal. So it's going to look a lot like the dividend discount model. So that 340 you did, it's going to look a lot like that. So equal open parentheses. Click on the 5.49 dividend times open parentheses 1 plus your 4% growth, just like you did in the other formula. Close parentheses. And here's the different part. Then you do plus, we're going to add just few numbers here, plus the 459
The,
C5
mm,
times your age, which is 3, is 15% minus your 4%. Close parentheses twice, divided by,
divided by,
open parentheses. Your KE. Self file somewhere, I don't know where it is off. It's in the file we were in, it's in there, you used it. So go back to the file that we were using.
this one?
No.
Oh, this one.
Just typing it. Off to the right,
KE.
discount rate, discount.
My discount rate?
I can't.
Oh, yeah, it's right
There
here.
it is, 5.4 minus 4%. Right, hit enter. Oh, wow, it did 154. Getting a lot closer. Almost right on top of where they are. So that may be it. So that's the scenario where that 459 dividend is just way too high because of COVID. They were helped so much. So they're gonna have about 6 years where they're gonna have low average growth, and they'll get back to normal. So that might be the better valuation, that 154. Still a good valuation because they're trading for 145. So it's still showing them cheap. But I don't think this argues for our put option or our call option because it's not expensive.
So I could say that.
The dividend discount model, if they can somehow, and that's where I think, if you go back to the EE on Bloomberg, change it back to quarters, definitely seeing that they've just been dropping here in the last several quarters, and they've been missing almost every time. So look at the graph on the left; they're just coming down, coming down, coming down. Two of those are actual numbers. I mean, look at everything since quarter 2/21. Every quarter has come down, and then Bloomberg has them starting to come back up a little bit, but it's just not dramatic. So it looks like we're still kind of adjusting back out of COVID. Read that. See that orange and right in the middle there at the bottom, post second quarter earnings, that Bloomberg Intelligence right in the middle. Orange, yeah, if you click on that, looks like it's an inflation issue that their cost of goods sold are shooting up. Clorox's inability to pass through higher costs is illustrated by the essential gross margin year-over-year drop. Experience adjusted EPS guidance downgrade, so they're bringing down their earnings. Custro has collapsed, elevated pandemic-driven demand. Their costs are going up, but they can't raise their prices, so their margins are getting squeezed. Okay, so it's a margin issue. Their sales are still up, but they can't raise their selling price enough to offset the higher cost. So that could be a temporary thing, if we resolve Russia and the Fed close the economy down, their cost of goods sold could drop, and their revenues aren't going to drop. People keep buying the same amount. So I think that 154 is probably on the low end that you get. I think you can stick with. This is not a bad stock to earn. That's pretty conservative right there at negative 15%, and it's in line with what Bloomberg's showing.
So they're just
cost and focus. So yeah, it's a cost issue, but that's a temporary thing. Got a lot of people Margins contracting, costs are up, they can't pass on the costs and the prices, which I don't know why that is, I guess. Costs are up, raise your prices, I don't think people are like, boy, I can't believe how much bleach costs right now. It's not a big part of people's budgets.
Mm-mm. Well, I think it's.
All right, so, I mean, that's what you're after, so you got the relative A, looks like they're kind of little cheap, little rich, depending on which number you look at. Their
Mhm.
valuation shows that this could be a good stock to buy. I'm not seeing anything that says it's a terrible. If you look at their credit ratings,
Yeah, they do have a lot of debt.
their debt. Triple B rated, investment grade, so that's good.
It's in.
Their lower default risk is IG3, which is good, so they're not, we don't have, yeah, their credit rating, you just type CRPR.
CRPR.
Triple B, that's a good rating. Open that rating. B plus is actually a really good rating right now. It sounds kind of low, but there are very few single A, double A, triple A stocks left. And for a firm with this much debt to still be investment grade, that's a good sign.
So
It's not like
they're managing.
so much debt, they've been downgraded.
Mhm.
You can click on that very top one, the Bloomberg default risk, and it will show you their score over time.
Oh wow. Oh wow.
Their price is down, so we are getting them cheap. It's going up, but not like radically. I mean, it looks radical. You went from 0.1% to 0.4%, so yeah, it went up fourfold. But still, 0.4% is still pretty low probability. It's probably because their debt has increased so much, and that's really where they show that they're way out of the range. Look at the debt to equity. The median's way to the left, and they're way to the right.
Yeah, that's quite a big margin.
Turnover rates or interest turnover, interest expense, they're really high. Your interest coverage is really high.
Yeah, that is. That.
Just really high in debt, so that's your one big negative. But you increased our beta to 0.5 to take that in consideration.
Mm-hmm.
You know, you could have argued for it as low as 0.2, but you're going to 0.5 to account for all that debt. Your valuation is buying 154. Stock you could buy and have some confidence in, especially given that it's dropped from 190 to 140. You know, if you're buying a stock that shot up during COVID, but it's since, you know, so we're not buying it like at the top.
This is like where it's already, it's dropping.
Yeah, in 2020, it jumped up to $240. So it's down $100. And buy at 140, then at 240.
Share price.
Big major issue with the stock.
70.
It's been on a long upward trajectory, kind of bouncing around. So save all of this. Now, if we were to have to write this up, that's the thing we ran out of time of this semester.
Yeah.
If you write it out, you start off with the industry, and they're pretty unique.
Mm-hmm.
And firm that it's not high growth, but because of the pandemic, can have some big bumps because they're part of the company itself. It does have a what we call an economic moat, market dominant player in a product that so dominates the market. Now, is this the one that also does Hidden Valley, or is that somebody else?
No, yeah, this is it owns Hidden Valley, Birds Bees. It has like the health and wellness brands.
But the Clorox, I mean, the cleaning is the big part, the biggest part.
Yeah, cleanliness, I think, is what they're going for, and also they're an ESG company, so that's what they're promoting.
Yeah, I mean ESG, so they certainly have issues. You know, you have to look at the production and see if their production itself destroys the economy, or to do better on that. But
Okay.
And then you get down to valuation.
Mhm.
And so on valuation, we did relative valuation, and on that one, it was mixed. They were expensive some places and cheap others. That was mixed. And then your valuation on discounted cash flow, cheap. We're doing 150 and 300. And that's, I think, with some fairly conservative assumptions. They're currently trading for 143, 145. So we used a beta that was higher than we really thought, just to account for the high debt, and that's going to bring that valuation down. We use a 4% growth rate, which I think is reasonable. Use negative 15%. So, you know, I think since that's all driven by inflation, that if inflation gets solved, then that could certainly see a big jump back. So I think we're being conservative here.
Mhm.
I think partly, you know, one of the reasons that they looked expensive on PE, but they look expensive on PE because the earnings really have fallen a bunch because of the cost pressures. I think that's a little temporary. So I think we might be exaggerating that overvaluation there. They were cheap on the EV to sales basis, and that's because their sales are doing well. It kind of makes sense, right? They're expensive on PE, but cheap on EV to sales, but their sales are doing fine as their costs.
Yeah.
So it kind of makes sense that they look cheap on EV to sales.
Well, at least they're keeping up with the costs. Yeah, I'd be more worried if their debt wasn't doing that good.
I don't understand why they can't raise their prices, but.
But I also I think maybe they're afraid to raise the prices because.
Well, they so dominate the market. I don't know what people would do. What the price of Clorox is, I don't even think about it.
Like, yeah, I don't really, I just buy it.
If it's 72 cents, I'm like, oh, it used to be 60 cents. I don't think I would even know.
Yeah. Yeah, I mean, I think when you go into the store, the first thing you want to buy is the Clorox brand because it's the cleanest, it's usually the cleanest and it has the packaging, which makes it feel that way.
Yeah, and even if HEB has their own brand, they may be buying it from Clorox. Yeah, so I think you picked a good company. This would be a good company. I think
I started some of the layout for it. I did an APA, but I don't know. I entered this.
So when you say Clorox, I mean, that's their rolling beta, so you have to change that to be rolling beta. And then for your x-axis, you probably want to change that just the years, rather than years.
Just the years?
Yeah, change the format just to be format axis. Why. Yeah, so that's the rolling beta. Relative value, you can create a chart there. I'm not the ultra, you tried that yet?
Also, I think there's a way you can see the relative valuation from here. You have to take it for it. And then, oh, no, this one. I clicked it.
This isn't what we've done.
Mhm.
Kind of a little bit more in depth than that, but it does show you that.
Okay. I actually had this company too, palm oil. That came on my buy list as well.
Yeah, all that would make sense. They're not necessarily the same. Yeah, we know their debt's really high. Ratio is high. That dropped out. So yeah, we were seeing that their PE ratio was high, but yeah. So I mean, that's it. You talk about the industry, it's all about growth. You talk about the industry, you talk about the company, its economic mode, relative valuation. And then discounted cash flow, that's where that rolling data comes in because that gives you your discount rate. And the final conclusion, usually what we like to do, something you might want to try. For final conclusion is we like to do what's called a football stock chart. Football field stock chart. And show you one. Third one down would work.
The third one down.
Across, I'm sorry, third one across.
Oh, this one?
Yeah, it's gonna look something like that. So the first one is your dividend discount model. You did the H model, you know, you can show your range there, 150 to 300. Your PE, what you do is you, that what they're doing, they're just looking at what's the median of all their companies, but I like what we did in Excel even better. What I like to do is take the relative PE, the 80th and the 20th percent, and do that range. Same thing with EV to EBITDA. We, you know, for this firm, PE and EV to revenue are the two you want to do. The 52-week high and low, you can certainly do that one. And then you put the current price in there.
Okay.
And what you're looking for is a firm, I don't know what their two colors are. I don't know what the 66 and the 72 are. One of those is the current price, but I don't know what. I think the 72 is probably their target price, and the 63 is probably the current price. So they're probably recommending a buy on this side because the current price is on the low end of their range. But yeah, if you can get a football chart into something you put on LinkedIn, this is just the thing today. That's what everybody's doing.
Okay. Yeah, I think I'll still work on this, even though I won't be on teaching.
Yeah, you just need to get ranges. So yeah, you've got all the data you need to get ranges. It's just a matter of plugging it. And there's YouTubes that show you how to do the football chart, but it's actually pretty easy to do.
Okay. Sounds
In fact,
good.
there's videos that are like 3 minutes long that show you how to do it. All right, good. Save it and
Okay.
want to write it up and put it into something and send it to me this summer. I'll look at it and give you feedback.
This was the. You see my screen, right?
Yeah.
Okay. I think it's. Yeah. No, we did the. I thought I sent it to myself. I thought we did the. Yeah, because we did it. We did the target one and we did the graph and everything. But I can't find it. It's gonna bug me. Let's see. So I thought I saved it to my OneDrive. Should be either this one. Last week?
Yeah.
Maybe. Let's check. But if the ones that I did have are showing up, then let me try. Well, I didn't log in. These are all from March.
Yeah,
Let's see. But I thought I saved it, like I sent it to myself, but I can't even find the email. But I know I saved it to my OneDrive, unless I saved it. But I was logged in.
yeah, I think you're one right.
Yeah, like I looked, but the most recent thing was from 2 weeks ago, was the articles that I saved. But because I know I sent it to myself because it's basically what we're doing in class. So I was like, I was gonna save it
Yeah,
to
you
do
can-
later,
Number 8.
but I can't remember where I put it. Man, it's all good. Let's see. Share party. Cycle pen. Well,
We can do it. Well, we did the relative value though, didn't we?
yeah, because you sent me the big model, and then I put my numbers in, or I put my company in,
Yeah.
and then he gave me the relative value, and then we
Yeah.
started doing the beta, and I think
So that's still Walmart there.
yeah, I mean I guess
We can redo that one real quick.
Trying to see.
You have to be in Bloomberg though.
yeah.
Well, yeah, I guess we should use all of these files.
Am I the only one that lost stuff, or
Well, if you're logged under my name, it should be there.
Yeah.
No one else has said they have, but I'm not sure how everybody's, I'm not really paying attention, everybody's saving the files.
because what had happened was we did this part, and then we had done this one too. We had done where's it? Not that one. We had
What's
done
the last day of the sector classes?
This week,
Tuesday.
Oh,
It's gonna pop.
well, we can redo them both.
Okay.
Yeah, we'll get the evaluation done.
Okay, that's fine.
So I wasn't able to make it last week, so I was hoping, whatever you did last week, maybe you can send that to me.
I lost
Well,
it.
he's gonna redo what I did last week.
Yeah.
Well, let's start with the relative value one.
Okay.
Find that by, bring up that Walmart one. You have to get it in black Bloomberg.
Yeah, I'm logged in.
All right, so yeah, just go to the Bloomberg one. Just change the CLX. What is that? Things the 1990 on in B2. I don't know how far back we can go with Target. Down the page, and let's see where the data starts.
May 4th, 1990.
You want to do 531.90.
Okay.
Got consumer staple over in G5. Do you want to change that to discretionary?
Yeah, that's what we did last time. So I
Change that S to a D. No, not that. No.
Oh, I did the wrong one.
Yeah, it's S5 COND. I mean, you have to have the work index at the end.
Okay.
Do base.
Okay. So
S. All right, and then you have the little triangle to select everything. See, there you go. These values. Right click, make it. Right click and paste 1, 2, 3.
Mhm.
Okay. All right, so go to your output. Fresh. So the trading cheap versus everything.
Mhm.
The first two PE ratio, they're really cheap,
Mhm.
and EV to sales, they're really cheap. So yeah, they're. All right. Save that somewhere where you can find it. Save it as a target file.
Well, let me see. It says cannot access file. It has the same name as it currently open.
File set.
It didn't even like. It's not
Put
even.
it. Maybe put it on the desktop.
Oh God. Technology.
Oh. All right, so there's one thing down. All right, then the rolling beta.
This is the data from it. Like this is
Oh,
what I
you
got.
it.
This is what we had last week. But I think I want to say that this is the S&P 500 on
Go to
the.
the very bottom. It's too small for us. So go to the very bottom. Last one is 229.
I guess this is close.
Target.
It's 240 right now.
Yeah, so that's the data.
Okay.
All right, so get rid of everything but column F and A.
Said everything.
Everything but A and F. Yeah. We need to get the market over there. So go out to Yahoo Finance. Let's get the market.
I don't know if we got that last one because it's ads in the way.
No, you,
Okay.
We're gonna get rid of everything but adjusting close again. No, we'll keep the dates. Keep the dates. Sorry.
Oh, okay.
Sorted by date. Sorted by date.
Oh.
Make sure you have both columns fixed there. Not that. C and D.
Now I
Go
can
down
get
to the
rid of
bottom. Yeah, they're lined up. Go down to the very bottom. Roll left, roll down. Grab April. All right, so go back to the top. And D.
Let me see if I remember. Is it equals the difference between the two?
Well, it depends how you set the formula.
Or it's
You want the percentage change, so there's two different ways you can do that.
so this divided by this?
No, because you only want column C or column B.
Okay.
So you want to do B3 divided by B2.
Oh, the change between, okay.
And then -1. Copy that over and copy it down. Right, so go down, rows, so down the row 63, right?
Mm-hmm.
63, 3 more. Down 3 more, that's, yeah, 63. Slow. He's in big target first. D, control shift up, comma, pick the market.
Forgetting that it doesn't do that.
Check it against finance here. Last number is 105. Finance is 106, but we're doing it through March, so if we go through, oh, yeah, it is 106.
Yeah.
All right, so yeah, 106 matches exactly. All right, so you might graph that. You can see on operating and exercise number 8, I like to do the median and 90th and 10 percentiles.
I think that's what we did last week. So I would have to.
You go up to the top of that control up. Start using your control up. Go over to F1 and you can control down. Yeah. .5. 1.9, 1.9. All right, and you come over to G 63 equal percentile. Yeah, we'll shift down to F4. So the median's right at 1. We kind of talked about that, right?
Mm-hmm.
So yeah, if you graph that, you have everything you need for paper. Exercise 8, other than, but you need to have F in there as well. F, G, H, I. Line chart. Like it?
Kind of. Yeah, similar to what we had
I
last
mean,
week.
1 makes it kind of easy. 1's kind of a good number, which means the whole debate about the risk-free rate and all that doesn't matter. When your beta is 1, it's going to use whatever the expected return for the stock market is.
Why did we start at 63? Is that like 10 years ago?
Yeah, it's 5 years.
Okay.
Because that's the same thing. We're doing that because it's the same thing that Yahoo Finance does. It
Okay.
uses a check digit.
Okay.
I used to do 3 years weekly because that's what Yahoo Finance does. You got that. The other thing you need on paper 8, which is probably out there if you find the file, find the one that says, make sure you save this one again.
I'm gonna email it to myself.
You have to edit it a little bit.
Yeah, let me see.
And change it from a CSV to
Excel file.
Excel. And one other file, it's probably out there, so under Excel.
Is it the one? Is it this one right here?
Yeah.
This one?
That one. Yeah, just change that to target.
Okay.
The best thing is to go to the second page. Find target first. Oh, enable editing. Yeah, find target first. So it's line 2657. Then you go back to the summary.
And type in that on
Yeah,
it.
just make 2657. It's a lot easier.
Smart.
There's your fading. All right, so that we remember they have high debt but very stable. I think that one beta makes a lot of sense. Their debt is high, but it's not ridiculous.
Mhm.
Their margins are very, very stable. In fact, their net margin is just ridiculously stable, not even 1%. So I think you can argue. So save this file as well with target instead of Avid Labs in the top. Target leverage or something. Yeah, so you've got everything you need. Application 8 of them just cleaning up a little bit.
Do we have to write a paper on it? Not a paper, but like a summary? Isn't that what it said? Okay.
Yeah, you go through the 4 steps. So the first step is the revenue sensitivity, which for target is kind of on the edge between cyclical and defensive.
Right.
So that someone argues the 1. Their margins are very, very stable, so that argues a lower beta. Their debt's high, so that might push you up some. But then the historical beta, it's just going to be rolling around the 1. So 1, if you did anything, you might push it up a little bit because of the debt. You might push it down a little bit because their margins are stable, but essentially you can make a strong argument for a 1 beta.
And is this percent like saying that they're in the top 15 or the bottom 15?
Well, you can tell they're below the average.
Right.
So 384 is the median. So yeah, they're
Top 85.
They're one of the lowest volatile companies.
Okay. And this would mean
They're one of the most
debt.
They're
Okay.
the top 25 for the most debt.
How does it like, so is it the top 75 or is it the like 25 most?
Well, I would say they're the top 25% highest
Okay.
debt.
So then 25, okay, 25th percentile.
Their debt's higher than 75% of the stocks. You can say either way.
Yeah.
Their
Sounds
margins are more stable than 97% of the companies out there.
For sure.
That's pretty strong. That sounds really good.
not too bad. Okay, so
Yeah, so keep those files saved. So that gives us a beta, so it comes down to valuation. You could put your valuation in one of these files if you wanted to.
okay.
So for valuation, you need the risk-free rate, which today is at 2.9%. This is the 10-year treasury. Well, the stock market value today, but treasuries still up. Yeah, 10-year treasury is 2.92%. Well, we're getting up to 3. Seen 3 in a while, and then the market risk premium always use 5%.
Why is that?
And that's about where it is today.
Oh.
Assume stocks are going to make about 8%.
Mhm.
You need the beta, so let's start with the 1 beta. It's kind of simple. Then you need a growth rate. Let's go with 4%, just because I think the economy can grow about 5, and this is not like one of the high growth ones.
Mhm.
And then you need a short-term growth rate. And this one we can get. Running out of time, so I'm just going to give you
Mhm.
a real quick one. There's something called the PEG ratio.
I think you showed me this last semester.
Did we do it? Yeah. So the PEG ratio right now, you take 1664 divided by 1.4, and that tells you what the growth rate is. So it's probably around 8%. Or so yeah, plus 16.64 divided by 1.4. 11%. Check Bloomberg just real quick.
11.989.
Now, Bloomberg says, did we do Bloomberg last week?
I think Larissa did. I walked in while she was doing it.
Right, so Bloomberg says, you can do it to the right of it, so I have 2 numbers.
Mm.
So Bloomberg says it's equal, open parentheses, 19.055
Mhm.
divided by 13.2223, close parentheses,
Mhm.
raised parentheses, 1 divided by 4, close parentheses, minus 1. Yes, so maybe short-term growth, we'll say 10%.
Okay.
So maybe move those to the right. We'll just put, just cut those to the right. All right, and then you need an H. The H is how long they're gonna be able to keep the higher growth going, and it's half of that period of time. Just like, for H, just for now, let's just use 3. H is pretty subjective number, so we'll just use 3 for now.
3% or just 3?
No, just 3.
3? Okay.
Yeah, so just 3. All right, so let's do, okay, how much time we have? All right, we got enough time. So the dividend discount model. Remember this one? We haven't done it yet in class average. We're probably going to start on Thursday. We'll see. Dividend scheme, call it BDM. So go over to B, do equal open parentheses. And here, oh, we got to get their dividend. Go up to A9 and just, no, hit escape. Go up to A9, we gotta put dividends in there.
Mhm.
So dividends are equal 0.9 times 3. Or their dividends jumped just recently, plus 0.68. Boy, their dividends jumped from 68 cents to 90 cents. Let me go back a little.
So what are these numbers? So 90, the 0.9 is the amount per share?
Yeah, they paid a 90-cent dividend, but boy, that's a big jump. So they just recently jumped their dividends quite dramatically.
And is it 3 how many times a year?
Well, the last 3 quarters, they paid 90
Okay.
cents.
Then
The
this.
quarter before that, they paid 68 cents.
Oh, okay.
So that's their last year of dividends.
Okay, got you.
All right,
For
so
sure.
for the dividend discount model, so go down to that, say do equal open parentheses. 3.38 times, open parentheses, 1 plus your growth rate of 4%, plus parentheses twice, by, open parentheses, the risk-free rate, plus the market risk premium, times your beta, discount rate, right? Remember, cap in risk-free rate plus beta times market risk premium, minus your growth rate at 4%. Whoa, that's a low number, isn't it? Rating 246. All right, let's try the H model. I don't think the H model is going to give us much more. We'll have to figure out what the issue is here, but all right. So it's going to look a lot like a dividend discount model. So you open parentheses, the dividend, the 338 times open parentheses, 1 plus the 4%, just like it did before. Plus the dividend again, no, just 1 parentheses, plus the dividend again, times the H, the 3, times open parentheses, short-term growth at 10%, or close parentheses twice.
Oh.
Divided by same thing as before, open parentheses,
Cap in.
292.92% plus the market risk premium times the beta long-term growth. It's going to be a little bit higher than 89, probably not dramatic.
You said long-term growth?
Yeah, long-term growth. Parentheses, so you got 105. Boy, what could we be wrong on? And it's got to be that long-term growth rate. You can try 5% there if you want to.
Is it saying that it should be higher?
Well,
Yeah.
even that doesn't get you close to 246.
Maybe our beta?
I don't think the market's using anything radically off of one. The other thing we can do is, I'm going to look up one last number, and it's maybe that dividend is really way off. So
So would that be how much cash they generate per share they have?
Yeah, dividends are supposed to approximate free cash flow,
Mhm.
but some firms don't do that, so, save that, why don't you insert a new column?
Between B and C?
Yeah. All right, just copy B over verbatim. Now go down to your dividend. And instead of the 338, we're going to use their free cash flow per share.
Hmm.
That's 1031. That gives you more in the ballpark of what they're doing. So go back to the 4% growth because that 5 is just way too high. Means that in both places. I think that's what the market's doing. They're using their free cash flow.
Mhm.
Now that's getting you a value higher than the current price.
Is that how, like, basically so this is how they determine what the stock should be trading at based on these?
Yeah, most people say free cash flow is a better number than dividend.
So what is the H number? Like, what is that?
Well, H just says they're growing really fast right now, 10%.
Mhm.
But we think they're gonna go from the 10% to the 4% over the next 6 years, and the H is half of that period of time.
So, okay, so 6 divided by 2.
Yeah.
Gotcha.
It's the half-life is what it is.
Gotcha.
All right, save this. You got some valuations, you got the relative valuations. You could do a pretty good football chart out of those. Football chart just looks your ranges versus the current price.
Right. Okay.
So this stock is looking cheap. Your relative value both look cheap. Your valuation using free cash flow looks cheap. Using dividends, it doesn't, but their dividends have jumped so much recently.
So if I was to make the growth rate lower, then they would be valued lower as well.
Yeah, so it's gonna keep following everything.
So if I did something crazy.
Well, it can't be more than your discount rate.
Gotcha, okay. So it has to be
I don't know what your discount rate. Well, your discount rate is 792, so your growth rate has to be less than 7.5%. Yeah, if you use 793, 792, it's going to get infinity. You can get an error message. Type 792, you'll see it.
I think it's rounding it. Let's see. Oh, okay, yeah.
You can't divide by 0 because you're taking 792 minus 792.
Gotcha.
So, 7.5 is probably the most you can do. 4, I think it's pretty reasonable because I think our economy will grow about 5%.
So what if I change this beta to like 1.2?
Yeah, if you increase it, the value comes
And the
down. If
value
you
goes
reduce it, the value goes down.
I would say the beta. I think the beta would be higher than 1 because they're expanding to more like discretionary stuff like the UTSA.
Yeah, groceries is going to be a smaller piece.
Yeah, I'm saying.
That's, it's a subjective part of it.
And the little marketing thing they're doing too, that's outside of the actual grocery. So let's say like 1.15.
Yeah, that's the subjective part. That's
But
what you do on the
you said Yahoo Finances says 1.06.
Well, that's just the regression data. There probably are people that are using that number.
Mhm.
To me, it's like 1 versus 1.06. It's like, are you really that precise?
It's not that big a
It's a number
difference.
that's going to change every month.
Right.
1 seems reasonable for target. They are right between the discretion.
Let me email this to myself before I forget.
Make sure you save everything, email it to you. I'll make sure to get it to you. Free cash flow, I like that number better too. I don't like the way Bloomberg calculates it, but the way they calculate it actually gives you a conservative number.
Mhm.
And so if anything, it's giving you a lower number versus a higher valuation. So it looks like Target's probably not a bad buy right now. Well, you finish the semester with, you could probably put a buy recommendation on the stock.
Because the value that they are right now is less than what I have it in this model.
Yeah, and their earnings are much, much higher than the dividends. So I think the dividend is probably not a good valuation. This is a stock that maybe they're reinvesting instead of paying dividends or something, or owning cash or something, but yeah, their dividends are a small fraction of their earnings.
Okay.
All right, good. Good job.
Thanks.
Okay, you right there? Or do I need to mute?
Yeah, I can see I got the follow.
Okay, cool. So this is our last class together. We kind of went through a lot of functions in Excel, some new, such as the X lookup. We went ahead and did a little Excel interview case study with the multifamily property, just to see how some of these functions will be used in the actual job. And then we went ahead and went back to the basics and started doing some lookups, referencing, a lot of ifs, functions in the data that we have, and the arrays and all that. And today we're going to conclude our class working in this little math cell, or these math cells right here. And so now we're going to turn to some most frequently used and beneficial mathematical functions in Excel. So like the reference and lookup functions, the usefulness of these functions really become apparent when combining with other Excel functionalities. So right here, what we're looking at is 2014 M&A league tables. So you got advisors, geography, number of deals, and the average deal size. What we're going to be looking at really won't be looking at this. There's some tranches. Pretty sure you're familiar with what these are. So looking at options, as well as turning trues into one falses in Excel. So we can go over these little examples right here, but let's go ahead and start filling out these. And where is my ribbon at? The drop down button. I don't like. Here you go.
Oh, there it is.
Cool. Okay, so first we need to go ahead and select region, and how we do that is we insert a drop down menu. And so on how to do this, it's Alt-DL. And going to be we're going to take a list, and our source is going to come from, so we're looking for a region. We're going to take our geography, so that's the region. So enter and OK, tab or Alt to get in it. Unfortunately, you can't do that. That's how you enable this little drop down menu, which is I use the Alt-DL key. And that's a data validation tool. And simply what this just does is once we start doing these, we're going to be wanting to find certain region and certain advisors on how many deals they're doing actively, and also the average deal size. And these numbers are in millions. So what we just did, we selected a region, and we're going to go ahead and do the same thing when you select an advisor. So Alt-DL, hit tab, we want to do a list. And our source is going to be the advisors. So boom, our drop down works. We'll get into Fieldman Brothers, Barlow Associates, etc. We'll just click Feldman Brothers for now. So let's keep France and Feldman Brothers, just to FNF. So as we were doing the lower job down menu, as I mentioned, we're going to be working through the sum product and to calculate the global M&A deal volume using the sum product function. Now, there's an example would be kind of over here on what this sum product is going to kind of do. And before I talk about this little part right here, do you know how options work? Okay, just for the, I guess, the Zoom meeting, typically how options work, and you can correct me if I'm wrong, is whenever someone gets an options, there is an associated exercise price, right? Now, if the actual company's share price is below that exercise price, then consider it logical for the user to exercise those options and convert them into common stock. Now, if the actual share price is actually higher, so if the actual share price, let's just say it's $28, or for this instance, yeah, let's just assume like it's around $20. Now, if the actual share price is actually higher than the exercise price, and those options are considered in the money options. So it's kind of what it's doing. So if you get this exercise price, here's going to be the little max proceeds. You're just multiplying that options with the exercise price. Now going to over here on how we calculate our sum product. So what the sum product is, we can just type it in and it will give us a great definition. It returns the products of corresponding ranges and arrays. And so how we're going to do this? So one, we're going to calculate the global M&A deal volume using the sum product. And so how we do this is we're going to take our sum product. It's asking for an array. So our array, we're looking for the number of deals since it's asking about the deal volume, right? Once we select that array, it's asking for another array. What we're going to do is we're going to take our average deal size. Since it's asking for the deal volume, and we need to know how much is in all of these deals. So hit enter, we get 28,800. And if we want to format this to have 2 decimals, we can also do Control-1. And right now, this is a custom format option that Wall Street Prep had implemented. But if we want to just make this a number as in general, we want 2 decimal places. Here's how you format the cells. Yeah. But for right now, we're just going to keep it consistent with these. It's only to the 1 decimal. But if you ever do want to format, Control-1, a lot of things that you can do in here: general, number, currency, accounting. I like to use the custom formatting a lot as well, especially when you're doing multiples. So you can have that little X on the side. It makes it look a lot cleaner in Excel. But there you go. That's how you do the sum product. And then now going down so there's a lesser feature. The sum product is the ability of an embedded criteria, which is going directly to the arrays. So before we can use that, we need to first understand how Excel really deals with these arguments that evaluate a true or false with these Booleans. And I'll show you, hopefully this works, but typically what we're going to do right here, so we're embedding criteria into the sum product. So we're going to identify an average deal size for the user selected advisor and region using the sum product, as well as doing the total deal volume for the user selected advisor and the region using the sum product function. So first, what is all this? Well, this is a lesser known feature of the sum product, and it's the ability to embed criteria directly into the arrays. Now, for example, we can directly calculate the proceeds on options over here that have an exercise price less than the share price, so you no longer have to calculate options proceeds for each tranche. But for this, we're going to, so for this, what we're going to be doing is we're just going to essentially take our sum product, right? And we're going to put this in parentheses, right? And we're going to take our advisors. That's the array that we want to take. And we're going to say, if this is equal to this advisor, and sum that up, because soon we're going to be taking the average deal size from this. Now we need to multiply this by that select a region, because we want to see from the advisors to the geography what the average deal size is on what they're doing with these. Because typically what all these advisors are doing, they all manage in the same, all these same locations. So we're going to take our, this array right here, and we're going to equal this again to this region, since we're still looking for France and the Feldman brothers, right? And then we have to go back. I forgot to do this. You have to put both of these parentheses in right here, another parentheses in right here. And then we're gonna say, what is the sum of this little sum product of this average deal size right here? And if you click enter, you should get 500. That is the correct answer. And I'll put the formula text box to the side. So are we all good right there?
Yeah.
Cool. And so what we can do now, we're going to be doing the same thing, but we're just going to be calculating the total deal volume. And so what we can do is we can either cheat a little and copy this. And we can get into this and we can just fix these ranges right here, or we could stall and so that's incorrect. Oh, you know what? I missed this. We have to do two sum products in this calculation. So yes, you can copy this down right here. So copy this. Since we're looking for identifying the total deal volume for the user selected advisor and the region of this of the sum product, what we're going to do is we're going to keep the same exact formula, but all we're going to do is add our average number of deals. And what that should get you, it should get you to 1,000, I believe, and it put it in the wrong one. So I'm just gonna.
Okay, that's the average.
Yeah.
What was that 500?
No, that was right. I had put this in the wrong one. So I need to put this right here, and then I need to get rid of this. Down. So and then this should be right there. Down. Is there anything that you can?
I understand the 1,000.
Identifying the average deal size. So we're just. So this is what I mean by when you're trying to look if it works. I'm not really sure. There's not.
On the average, you would have to.
Not that didn't work. See,
And divide by the number of deals. E times E and divide by D. This time it worked because there was only one. There's only one that lined up with everything. That's the other element.
right.
But if there were two elements.
See, I'm not sure how to get into this to show what this is actually doing, because all these numbers can look very confusing. And if typically what I want to get to over here is there's turning trues into ones and falses into zero. So here, if the number is greater than, or number one is greater than number two, well, this is not going to recognize it like this. If you multiply it, then this result by one, then it's going to recognize by one. For instance, if you multiply a result by true, it's going to say what's true times true is going to be one, because it's basically that's what Excel is doing, is basically saying, okay, what's this times this, and it's similar to like one times one, but it wouldn't work if the number is greater. It'll just give you something like this, and that's what I want. So if I do formula text. We can either control V or control ESF. And so, yes, this is multiplying by one, so it should give you one. It's pulling from right here. Now, if this, you're gonna do the same thing, true and false, same thing if you're, once you're doing your if statements or your V lookups, and you know you have that zero, or your false pulls out a zero. It's kind of similar to what this is doing. Yeah. To do the same thing down here just so you can see, and bam. So false, zero, and then true, and Excel is one. Simple.
Yeah, that's what you were doing. I've never seen it before. You were doing that the other day. It's like you multiply by something, but yeah, it's Excel is interpreted as a true or false.
Yeah.
That's interesting. It could be thinking scenarios I would need, but yeah.
So going on, we're gonna be looking through the sum if and average ifs. And so what a sum if does, it shows you your range criteria and your sum range and adds the cell specific or specified by a given criteria. Now the criteria can either be hard coded, which requires quotation marks, as you see, as you could see, like if I were to, for instance, there's not a good example in this one, but they can require quotation marks or a direct cell reference, which you would not need quotes around. So, for instance, like, I wish I had a good example to show you, but that's the best way I can explain it for right now. But sum ifs, there's a range 1 criteria, sum range 1, range 2, and so on. And same as a sum if, but can handle sum ifs, they can handle multiple criteria and sum ranges. That's what we'll get down to right here. And typically what sum ifs do is they work backwards from the sum if formula. And you'll see that here shortly. Now, average ifs and average ifs, they're identical to the sum if and sum ifs, but instead of summing, this function averages the data in the range. So that's pretty straightforward. And now we'll go ahead and finish this little cell, these cells right here. And so how you do this, so we're gonna be calculating a total number of deals done in the user's selected region using a sum if function. So again, using our sum if, rather than, did we use some part of, okay, just making sure. So sum if, so our range is going to be the geography, the region that we're looking at, because again, we're calculating the total numbers of deals done in that selected region. Now, after we're going to do that, well, we have to select a region, and right here we have France. So that's going to be our criteria. And what I want to spit out is the number of deals. So I'm going to pull this array right here. Close parentheses, you don't have to if you don't want to. And this should give you 13. I'll just pull this all throughout right now. All good with that one?
Yeah.
Great, great. So now we're going to be going and calculating the average number of deals done in the user selected region using the average if. So as mentioned before, what the average if does is identical to sum if, but instead of summing, this function just gives an average of the data that we're pulling from that range. So average if, very similar to sum if. Take our range, which is the same thing. See, we could have cheated a little and pulled the same thing, but just changed the sum if to an average if, and you'll see on the side when I pull it. And so we're still doing the average number of deals done, deal size, yeah, 3.3. So what I mean is we could have took it, it's literally the same thing. The only thing that changes is the average if. Now for the last thing on this little cell, and probably what I have, the only thing that I have left for you guys, I wanted to get through this, but as you can see, it's a lot to go through. But we can get through these really quickly. These are just very straightforward, but to do these really quick, the sum ifs. So you're going to see that how sum ifs wants to work. So it wants a sum range at first, then it wants a criteria, and then so on. If we look at over here, or if we take a sum if, it takes the range criteria and the sum range. So as you can see, it's working backwards. So sum ifs. And what we're going to be doing here is we're going to be identifying average deal size for the user selected advisor and regions using the sum ifs function, ifs. And so what we're going to take right here, since we're looking for the average deal size, we're going to take this little criteria, as well as we're going to take the geography, so the region. And then we're going to link this to, since we're looking for a region still, so we're looking for Francis, and so we're going to take C17. And now we're going to continue to fill out what we're looking for. So since we're looking for the average deal size, we're going to go ahead and we have to take these advisors right here because we're looking for an advisor and region. And then we can just take the C18, which is giving us our advisor. It's looking for that advisor in the left and in our, and also the geography and also the average deal size within it. And so if you do that correctly, you should get 500. And I'll leave the formula on the side. All good, right?
One.
Right.
Yeah, there's only one, there's not like two Bellmans in France.
Right. So after we can play with this and we can see how these move all together, and if it's working correctly, all these should move correctly. But same thing here, we're going to be looking. So this is going to be a little bit more difficult. We're going to identify the total deal volume for the user selected advisor and the region using the sum ifs. So this is going to be a little bit lengthy. As I mentioned in prior classes, stay away from lengthy formulas, but unfortunately we have to do it right here. If there's another way, I'd be happy to listen and figure that out because I'm not a big fan of this one. So sum ifs. So first we're going to pull our average deal size as we did before. We're going to take our region, basically doing the same thing as before, and then the region that we're looking for, France. After that, we're going to do the same thing as we did before. Again, we're going to take the advisors and link it to the selected advisor, our preference. And then close this parentheses, and then we're going to multiply this in order to find the deal volume as well. So we're going to do another sum ifs. We're going to take the sum range of this now. We're going to say, okay, where is France in this one? Same thing. After you do that, we're going to pull again the advisors and link it to our selected advisor, which is Feldman Brothers. Close this, bam. And let me.
You're just saying that's busier than the one above?
Basically, it's still straightforward. It's still, yeah.
Yeah, I don't see a huge difference. One uses an equal sign, one uses a comma. Similar, that's for sure.
These up here?
25 versus 33.
Right.
It's a longer form, but it's not quadratic.
It's not too difficult, but with the arrays that we have in the data.
I wonder why Microsoft built the two of them. What is the S?
Yeah, I'm not quite sure. I think they both work fairly similar.
Yeah.
Because if you like looking at these and then also these, it gives you the same number. So this is just a little byproduct of what multiple things you can do with the sum product. Now, if you don't want to do that, of course, here's your longer route if you want to take that route as well. This is probably a little bit more straightforward. This one is a little bit more math and thinking that you have to do. Now, we'll see that we got these right. So France, Feldman Brothers, 2,800, I think that we got that. Yes, 500, 1,000, 13, 3.3. Yep, correct. And so right here, the last thing for this class, there's just some other useful functions that you should probably get a lot comfortable with. So there's the absolute, it just expresses that this is not a negative anymore. So if I want to do -5 and I want to make it the same format, then I don't want that anymore. I do an absolute. Down 5. So straightforward. The ceiling, it's basically another rounding tool that we use. Floor, the same thing. Combination, it just returns the sum of the years. So there's an n plus 1 divided by 2. That's how you get to that one. The rounding, pretty sure you're familiar with these. And round up function, round down, and I didn't like that, so. And then right here is where we're going to start using all of these right here. So it's basically telling us what to do, and I don't like that this is in the cell. So what do? We do Alt HOI instead of coming all the way up here and wasting our precious little seconds. So we can do Alt HOI, or Alt HO gets you into all the options of the formatting size. So if you want to auto fit the height, the column width, Alt HO, and then since we're looking to auto fit the column width, yes, very powerful tool in my opinion. And so right here, what we're going to do is you're going to start seeing these moves because these are going to be pulling from these certain cells. And so what it's telling you is take your short-term debt minus the end of the end of period using the max function. And so how you use that is you take your max function and you can set this number, or you can set it to either 0 or either one. I like to set it to 0 as my number 1, just to say that's where my start is. And then I like to minus it by these two numbers because 1, we didn't have anything starting, and down. So that's what it's asking, our short-term debt minus our end of period. And so how we get across, we can either use the Control V, Control R, which is copying to the right, or we can use the Alt ES and then F to get into the formulas. We're going to use Control R just to save some time. Should be working. Yep, correct. So the borrowing capacity, so it's asking, so to go into this one, looking at the min, where we're going to be borrowing capacity that will be calculated as 5 times the lesser of the last year's EBITDA or the average EBITDA over the last 3 years. So since we're taking the 5 times, we're just going to do multiply by 5. So 5 times the min of F49 and E49. And that should get you this number right here. Basically how much you can borrow for the next coming year, taking the average minus this, the minimum. Now, we all know the count function is very similar. We did this in the beginning, just counting how many, count A, it counts everything that is not empty as well. So it's going to count that sold. Typically what count does, it doesn't like to add those in there. So I'll get you that. And then count if. So we're gonna take our range. It's gonna be the same thing right here. And we're gonna say how many properties are greater than 250. So comma, put this in quotation marks, 250, bam. That should get you 4. Yeah, it's an interesting little function that they have. So we're moving through this fairly quickly. I'm pretty sure we can get this done. 5. When do I have a cutoff? 5.
Well, I gotta meet with them at 5:30, so.
Okay.
Five.
Let's do these. I think these are
I know
Cool.
the X and PV pretty well.
okay. So we know how to do this one.
Yeah, I know the-
Yeah. All these are very straightforward. Like if you just type in IR, just follow the rules, values,
Yeah.
down 12%, X MPV, X MPV, the rate right here. Take the values. Pretty straightforward. Oh, put in too many. Oh yeah, the value, the dates.
Right, no,
Days come last.
Yeah.
Yeah, it's way easier than using the NPV because if you look, NPV,
Yeah, you get a much lower number.
and then especially if we're looking at this, you have to go in. Like I'm pretty sure you can do this. I believe. Oh, you can.
It's gonna be a lower number.
Yeah.
I don't know what's up there.
But yeah, just follow everything that it says in here, then bam, you should be great. But all the if we understand all of this, then this concludes the sector of the Excel for interviews, and hopefully you're more comfortable with the functions that Excel provides and something that you find useful in the classrooms and the work environment as well.
There's the book.
So here's where, parallel G, but price of the book probably makes no sense to me. Certainly do PE ratio. It's a little shaky. There's some shaky numbers. Revenue makes sense for them. PE ratio, they look really cheap on PE ratio.
Yeah.
Now, if you want to do the football field chart, I don't know if we talked about that, but
Is this the football? This is different.
no, the football field, what you do is you look at the 52-week high and low, and you compare it to your high and low on the H model, and then you can get a high and low on the PE ratio and a high and low on the table editing, but get high and low on the. What I do on the high and low, you might add a row with 5 or so.
Oh, row, sorry.
What you could do, like in V5, you can do equal percentile.
The array.
Dot EX just percentile.
Okay.
Highlight that whole.
Would I highlight these two or just the
notice
values?
the one that just comes V.
Control shift.
You have to do it over, I'm thinking. Oh, did it? Okay.
Oh, it did not. What?
Yeah, just type the word percentile and.
Man, hang on, let me redo this. Control shift down. Control shift down. Control shift down.
And then hit your F4 maybe twice. 0.8.
Where's the 0.8 coming from?
Plus 80% of that. And then copy that down and over. Or copy it down and make it the 0.2 instead of the 0.8. copy that over to the right. Look at where they are today, so like right now, they're 0.43.
Mm-hmm.
So if you take the current price times 0.99 divided by 0.43, that would be your high end of the stock. So I don't know what the current stock.
Divided by 0.33?
No, it's the 99 divided by 0.43 times your current stock price. So you're saying their PE ratio should be 99.
Okay.
It's currently 43, so you want to increase the current stock price, whatever the current stock price is.
I want to say it's at 130.21.
So you want to take parentheses 99, or actually go over to the 95. So
Yeah,
95 divided by 75. Oh no, wait.
Yep, sorry. Okay, I see the formula now.
You want to take 95 divided by the 43.
Oh,
Times 130.21.
did I just drag it down or?
You have to write it again.
Okay.
Dollars, but yes, so equal. Take the 5.9 divided by 0.43
By 43.
times 1. That gives you a range there. You can do the same thing using the 99 and 54 if you want. You might just keep it with the industry. It's up to you. One, you can do that same thing. You can probably copy those two, and you can actually probably copy D through D6 thing.
Through D6?
Yeah, just that whole section that you see. Right.
This one here?
Over price book, so put it like an L5.
Bless you. Bless you. I got a little cold as well. Well, not cold, I think it's just allergies.
No, go over, yeah, so it's that L, all right, so they're not as cheap there, so. You want to do a football chart. You've got your evaluation age model, you've got your PE ratio range, and you've got your price to book range. Going to the 52-week. Have you done a football chart before?
No, sir.
Why don't you get them all in one place then? So, why don't you copy and paste those values in the other one, or bring the other one over? Where's your evaluation?
I think this is all that we did.
Right, I mean your H model.
Oh, okay. Yeah, just put it all on the Excel, same
Put it all
Excel.
in one place somewhere.
Okay. And I should just use these numbers with the betas above them?
Well, yeah, those that 3, the 126, and the 199. Yeah, I'm not seeing one.
Am I doing it right? Where I put,
Well, that's you're not showing the cell that you're in.
oh, sorry.
Want those 4 prices.
The four, so these and then the relative.
No, the three is the 199.
Yeah, yeah. And then I have those here. So I wouldn't need these just to show.
No,
Okay. And then grab the numbers that we just grabbed from the other sheet.
yeah, you might be right there. Go back to the other, sorry, it's like, yeah, you have to switch every single time.
This one here. Is that it?
Well, let's add one more then, maybe down in D8
D8. This one here.
or 7. Well, parentheses. D3, I'm sorry, D3.
E3.
Yeah, the median. 43. Times 130. Copy that over to the
Just this number or all three of these?
the form. We've already got the other two. Just copy that one over. Right.
Copy it.
Price the book, over to the price of the book.
Oh, okay. Yes, yes.
Yeah. Right, so you got 1, 2, 3 prices there, 1, 2, 3 prices in B, so you can just take what's in B and N and copy that over.
Yes, sir. Should I these three or just the one?
The 3.
Okay, yes. Cut. Paste value. Cut. Paste values. Cool. And then I'm gonna label them really quickly, just so I know which ones I'm talking about. Price to book and then PE ratio.
So all
Put them all next to each other.
well, okay, the 169 goes with the 228 and 135. Bring the 228 over to column B. 135 below that.
Oh, go back. Cut. Below this one.
No.
This one here?
196 is there, yeah. And then the 181. Column B is somewhat of your target price, so you might take the average of those three. That'll be your target price. Just that. All right, so if you can do the football chart.
So what does the football chart cover? Just this basically?
Well, if you go over to maybe stop sharing and I'll show you. becoming really, really popular. See if we can find a good one.
Oh.
So what you do is so you need to get the 52-week range, put the 52-week range in there. You do your PE ratio, low to high. You do your price to book, low to high. You do your H model, low to high. You put your target price right in the middle. And then you put the current price somewhere in there. So you want all of those. So essentially what you do, I don't know how to do the dotted line. You have to add that manually. Essentially, are you going to do the chart so that you have these lines? You want to compare it with the current price. You can put your target price in there. So it's that kind of.
Okay.
See, they can get pretty radically. Here they have the current price up there. So if you have a target price, you can add that in as well. Two trading comparables, and you're doing one DCF. So what numbers are.
So just looking back, I need the PE ratio, the price to book, the H model, and the average target price down the middle. And then there was one more, wasn't there? Oh yeah, 52.
Let me just say, I'll just make up some numbers. So let's say your TCF range from say 126 to 199, your PE range from 185, I don't know what it is, but price of book 150 to 215, and the 52-week coverage is 110 to 150.
Okay.
So essentially what you're doing, you got to start it at 0.
Mm-hmm.
That's what you're going to do. You're going to insert one of these sideways charts.
Okay.
And then you're going to change the orange
To white.
to white and the outline to no outline. This is the chart, and then what you'll probably do, I thought this says 40%. Did 40%, I don't get that. But that's really just okay. Did the wrong kind of charts. Let me change the chart.
Oh,
Do
okay.
that.
That makes sense.
Fill is white, outline is white.
No fill. Yeah.
Actually,
The
you
no
want
fill.
the fill to be no fill.
Yeah.
So here you have, and then what you might actually do is say format it. So if you start at 100, or we got the 450. Oh, all right. So I'll fix that.
Where's
Here,
the
what you want to do is you want to do 199 minus that 30. So it's just the difference, right? What I'm doing.
yes.
So it adds up to the total. That gives you the right range. And then you'll put the current price. Current price is what, 130 or something. You put that there, and then your target price is over here. So that's what you're looking for, something like that.
Can you explain to me how you just subtracted that, but it didn't go all the way down to those numbers?
Well, essentially what we have is the sum of these is my max.
Yes.
The chart is adding. Adding. It's doing 0 to 126, and then it's adding 73. So the top of the chart is 199.
Okay.
But the bottom is 126. So it's going. You want it to go 126 and not 199. So you got to do 126 plus 73, which is what it's doing. I guess it's at the bottom. So 126 to 199 is what you want that to show. And now, can change. You want to change this over here, right?
Yeah, to the numbers or the names. Yeah.
So you
Titles.
put that in there. Well, I don't know how to get, I think on the current price, you just have to maybe draw a dotted line. And your target price, you just have to draw another dotted line. That's how you do a football chart. These are real popular, so it's good to get them into your presentations.
Yeah, that makes sense. It looks like it could be very useful. I mean, it just literally throws all the data together.
Yeah, and you're looking for a stock that's trading on the left side of that.
Yeah.
Anyway, so I'll turn it back over to you, but yeah, that's how you set it up.
Okay, yeah, that makes sense. I'll have to do that. I'll just do that right now. I don't.
Yeah, if you want to give it a try.
Yeah. So we have our H model number.
I mean, I can see what you're doing.
Okay, yeah, let me share.
You're doing that.
Thank you.
Ready?
Yes, sir.
78.06. 131.53. Close to their 52-week high. Yeah. Should have bought it like 6 months ago.
Beginning of the semester. And then the average target price is just something that we throw in, right? On that dotted line.
Yeah, that's your target price, 177, and then the current price, the 130.21. I want those dotted lines with the label. I'm not exactly sure.
Okay, yeah, I'll have to figure that out now. That's okay. What down is it? Oh. I was looking at the 10-year yesterday. I was having some fun. Okay, price to price ratio 0 with the high being by the low 181.39. Is that one it? Oh yeah, sorry. Zero. Yes.
And paste D over to E.
This one?
No, just D10, D13.
Oh, okay, yeah. Like that?
Oh, cut.
Oh.
Don't copy.
Control X. This one.
No fill,
This one here, no
yeah.
fill?
Outline, no.
No outline.
Outline, no. Ah, that's it. Yeah, got it.
Format axis.
No,
No?
that one you select it. Select that and then click on the edit on the right.
Ooh.
That one.
Then highlight. Okay.
Change, yeah, you want to change it. The max 300 is fine. Min 50. The max 300. You got it? It's just a matter of adding the current price and your target price.
Current price and target price.
Mainly put those in.
Can you elaborate on that part?
Well, you just want to remember the dotted line that just shows.
Oh, yeah, for the target price. Yeah, I don't,
We have to manually do that. I don't think it's possible to do that.
just like draw it on my own.
Yeah, do insert.
Oh, yeah, that's smart. I would honestly,
Over on the left, shape. Line right at the top there, very top line.
oh, very top line. Which one,
So
Professor?
that one, yeah.
This one?
I think the one you picked was fine.
Okay.
That one. And just drop where that 77 is.
177.
Now, one thing you could do is add another row and put those numbers in and then draw your line and then delete them. But if you can kind of where the 177 is. Kind of, I guess.
I would
Tell you
say,
what you could do, on, the price of book one,
okay.
go over and take that 192 and instead type on where that 196.92 is. On E12.
E12. Okay, right here.
Take that and multiply by 0 plus 177.82. Then draw your line right at the end of that bar.
Is it gonna let me insert a shape into the graph?
Yeah.
Oh, okay.
Good, you'll get exactly right. And then go back and edit that formula. Get that times 0 out. Go up to the E10. Equal 0 plus 130.21. Current price.
And then the 52-week on the end of this one?
Yeah. You can pick the line you already have. Just copy it.
Oh, okay.
No. That one was right. No, move that one up.
Okay.
Yeah, Control C and Control V. You got that one exactly where you want it. So you don't want to move that at all. Just Control C.
Control C
V.
and then Control V.
Yeah, and then just move it over. You gotta be careful when you move the chart because it may not move those lines.
Oh, you're right.
So be real careful. All right, so you got those lines where you want them. But I mean, save it. You can work with it, but that's what you got to do.
Yeah, I'll play with
Yeah,
it.
you got a good. So if you look at it, it looks like a pretty good buy. It's trading at the lower end. It is at its 52-week high, but its 52-week high is barely getting into your range.
Yeah.
Yeah, so save it. You got it.
Objective today, right, because this is our last class, so this is our last class. Is that right, Professor Speed?
Yeah.
Can we meet again, or is this, that's just like?
It's up to you, but yeah, we won't officially meet next week.
Okay, we won't officially, like he said, we won't officially meet, but if you guys want to, just send me an email. Let us look at the consensus, because I really wanted to finish this, IC member. But whether we do or don't, we spent the entire last class and we only made it, 3 slides deep, and 2 of them have no content. Right? They're just, your appendix, right? mean, are you guys ready now? Can we start early, that way we make some money? Yeah, if people come in, they come in. Yeah, because I do have class at 4. Yeah. What?
You have class at 4?
I have a class, well, like I have to, yeah. That's why, like, the only days that I'm able to stay late on my exam days, because my exams aren't in person. It's like, yeah. All right, so everyone's name is on this document. We see it.
You can put a D after Roger.
That's what I said. It was Cassie that said it was just G. Wait, after the G?
I mean, before.
Before, I was like, whoa, that's extra. Hey man, that's what I believe is wrong. Alex.
I don't know who put that there, but that's pretty funny.
I mean, do you not care about the lights? Do you just not care about this? I got everyone's name on this. Nice to meet you.
Very good.
I need those.
I'll make copies of the book.
Do run. No, yeah. That's good. I don't have enough. I can only run.
Oh, really?
Yeah, you guys are coming to the meeting, right? Just come to the meeting.
Yeah, vote tonight, right?
Vote Drew.
I didn't hear the speech first.
Oh, trust me, I got a very compelling speech.
Did you guys do speeches yesterday? I mean, last one. Oh, okay.
This week is the speeches. So the good thing about this speeches is I have nothing prepared. I'm going in raw.
Really?
Going raw. I got a slide behind me, and it's really just.
I think it's a good idea for the professional.
No, it's good. It's awesome.
It should count. No, maybe, it should count.
Okay. All right, boys. All right, so where are we? Where are we? Okay. So I think yesterday we stopped at market analysis, right? Not yesterday, last week, we stopped at market analysis. Now, we're looking for here is what relevant factors, right, may boost, the digestibility of this investment, right? So we already talked about our net absorption, familiar with net absorption. We are familiar with inventory. Inventory is just, that's just what we base net absorption on. Vacancy, asking rent per square foot. So I almost didn't, why don't we just fill out this chart? It's all sort of there. Have this information. I'm thinking, what else can we use though? What else can we do? We'll come up with it as it comes around. But why don't we start with that? Okay, and then the other distinction we're going to make here is between the larger Los Angeles area and specifically Orange, California. Right. Because specifically to Orange, to me that's like our sub-market, right? Like we're specifically in Orange, but whenever we're talking about just like general trends, right? It's gonna be kind of hard to find all our numbers specific to Orange. Whenever we can just find our MSA of Los Angeles. I think that's how we're gonna separate it, right? General economics are gonna come from the MSA. There are specifics, Orange. All right, so let's just divide this up. Who wants to take a crack at inventory? You got what?
I'm working on Los Angeles.
Los Angeles, okay. Los Angeles inventory. Alex, you already had the website up for Orange, right? Or you had the JLL research report on Orange? Didn't you? I remember like a couple classes ago, you found a JLL research report. Okay. I remember you had something that I was using. Whatever you can do to help fill this out. Mr. Rogers,
Yes, sir.
you think you can try to find the Orange, California JLL report? You should be able to find all this stuff right here. What? How many times do you want? I mean, honestly, I don't even put the same email. I just like
There's not like a-
random letters at randomletters.com. Who's Joe? Risk mitigating factors. So what did we say was our plan here? So the whole shtick about this property, right, was that it's under leased, right? There's a lot of vacancy, a lot of unnecessary vacancy, right? What happened?
Talk to the broker. They're expecting full vacancy.
Full vacancy?
Full vacancy. They're trying to get a corporate, like, they want to give it to us. And I was like, what would you do for the lease? Like, for the.
So they're just not gonna re-sign those leases?
Do all of them, they're like, by November, it'll be clear. But at this point, I think they're like, it's easier for us to just let it run out and sell it.
That makes no sense.
Yeah, now it's like a
What?
whole other different outlook.
You make more money when you have tenants. What? They may have, I don't know how that works. I guess if they're,
Would you want me to look for?
what are our metrics right now? We're looking for inventory, net absorption, vacancy, and average asking rent per square foot.
So total vacancy is gonna be 16.2%.
Write it in. Okay, you think I made it? You think I made it to MD by? Yeah, geez, man. I've already put in my months as analyst. my internship.
Copy all the fundamentals in jail report. So we ask them, right?
Drop it in there, man. It's gonna be that simple. But once again, I don't know if you guys remember from what I was saying last time, is that we have to be very careful with our format.
Oh, okay. So when it comes to asking rent, there's direct asking rent and sublease. I'm assuming we're going to direct.
Yeah,
Are we gonna specify it further or no?
Nah, let's just do direct. Inventory, it should, like, you look up where they got the net absorption from. That net absorption is gonna come from, like, literally like a number. It's gonna have like last quarter's inventory, present quarter's inventory. So should we change our strategy? I don't think we should. I think we're just gonna buy it as is, right? We're gonna disregard what the broker said. We're just gonna buy it as if we're buying it right. We're gonna say the property is 76% leased, so we're gonna go ahead and add our value by finding new tenants, right? But think about what kind of tenants could we possibly use? Where's our good tenants for a building like this? Go on, sir.
Professor.
Wants to pull from the.
It's just gonna say
It's just this
total.
one, right?
CB, no, well, is this all asset classes? This is.
Oh, I got it here.
Okay, yeah, for Los Angeles, just do the whole thing.
So this one?
Yes.
Or this one?
Do Los Angeles total, 191. 190. Central business district.
Oh, okay.
So that's another way of saying downtown.
Yeah.
Los Angeles North, so then those are all your subs, but. Yeah, and then urban is just everything outside the city. Were you able to, oh, nice, you found Oregon?
Yeah, we're both looking the same way we did for.
Yeah,
I want you to do this.
So 191, so what's yours at?
Why is this so different? It has an inventory, but.
Because I bet there's some
Oh,
overlap,
this is
but
because this is A class buildings and B class buildings.
okay, what's the total? Oh, yeah, wait, are you looking at A or?
Looking at totals of here, of all of it. Should we go for? the
Keep going
last-
down, is that it?
That's it, A, B, C. So I guess this would. be
Okay,
the
totals.
of everything.
Totals, did you get yours from totals?
Yeah, top line totals.
90, a little bit, or yeah, 95 million. And for Orange, it comes out to, no, Orange is 95 million, LA is 191. So I bet there is some overlap, but
Fortunately, we end up losing that.
so a negative is better. Your net absorption seems weird. Wait, no, it doesn't. My bad. I'm looking at the number. Your net absorption seems. Is that right? Huh. I guess it is. It's pretty negligible. 1%. Or 0.5%. I guess that's fair. So you could say the argument we can make here is that net absorption, right, for Orange, California, looks better than the MSA. You like Orange County, or yeah, I keep saying Orange just looks better as a sub-market to invest in than the wider LA area. It's like we're losing space faster than the area's average. That's very good because then I mean if we're investing in an area, what about everything in this investment makes it better than any other alternative? Right? It's like realistically, right now we just found like the one building on LoopNet that's worth $100 million. But like, if we were to have access to like the wider market, right? Yeah. Then ideally we would be choosing between multiple, right? We could have maybe $400 or $500 million buildings in LA, but why are we choosing this one in particular? And that is because what we have here is that absorption's in our favor. Absorption's in our favor. We got to do like one more statistic, right? Like what's moving in our favor right now? Let me open up my cheat sheet.
Sublease vacancies, what are our average office space like per unit?
Oh wait, do we not have that already? Yeah, we have it here. 385. It's the last column in our market asking rent. 385, and then 281 for Orange, which makes sense. It is a suburb, right? You're gonna charge less than is it?
No, but I mean like our office spaces, each unit, what's the average like square foot?
Oh, average square foot.
So in the GL report, it says that.
You mean like average square foot per unit?
Yeah, so like in the GL report, it says office spaces less than 10,000 square feet made up 61% of leases.
Out of all the sectors, 61% of new leases were office.
Well, no, of the office space. Of the office space.
Out of all office in LA.
Yeah. Orange County. Yeah.
Or Orange.
So the office spaces less than 10,000 square foot made up 61% of the leases.
Oh, so the smaller leases are making up most of the transactions, is what you're saying.
The smaller square footage.
Small, yeah, I mean that's our smaller plans, but interesting. I mean, think about how you can create a story out of that, right? Is that good or bad for us?
That's good.
I mean, is it? I mean, if
It's
suggestive that if we split up our floors, we could lease up our floors by section, and we could say we're more likely to lease. So whenever we get to our leasing slide, right, we can add that to our strategy. Is that because of that statistic that you just found, we're more likely to lease space that's smaller. It's a smaller floor. There we go. All right. Good point. Good point. Created the story. All right. Who's going to do the averages? Sick. And then who wants to steal my JLL, the vacancy chart? You have to recolor it. You have to recolor it.
Oh, well, mine's for Los Angeles.
Yeah, yours is, ooh, that's Mr. Yeah, exactly. He literally can't get in trouble. He's immune. He's immune. So Alex, actually, if you want to go ahead and throw in that strategy that we just mentioned, if we do that on transaction maybe. We could probably throw this in on risk and mitigating factors. So Alex, can I trust you to, you see that chart I have there? To basically replicate this chart and throw in like lease term. I mean, that's exactly what it is. It's like leases are our biggest play right now. Is our risk is that, you know, our lease, because we're down in vacancy. Excuse me, we're up in vacancy, down in occupancy, but we have two strategies. We could throw that in there. Yeah, that'll be our risk and mitigators. And then, like I was saying earlier, I want this formatted perfectly. Perfectly. Why am I looking at numbers? Why am I looking at figures in a different font? Because you're using some. That sounds like a write-up. That sounds like you don't get a lunch today.
Yeah, that sounds like it's. Yeah. Let's go for a barbershop.
Where'd you put that,
Risk mitigating factors is literally one slide below market analysis.
no, but I mean, like the other PowerPoint you showed?
It's in the drive. Yeah, just use that as an example. Follow that formatting to the T. Okay, boys. I can't believe I'm having to do this. I'm firing someone right now, but we are. Oh, is it okay? I'll take care of it. Awesome. Is it Garamond?
Yeah.
Oh, EB Garam. What is it called? Yeah, Garamond. Yeah.
I assume it was a normal.
It's EB.
Well, there's both.
Oh, yeah. No, we're fine the way it is. No, that's perfect. Very nice. Very nice, boys. If these are in parentheses, I want these in parentheses. Very nice. I'll do us the favor of writing our little bio. Oh, we need, before I write that, I need my little chart. My vacancy chart. Actually, I'll just go ahead and start. Yeah, like this one here. It'll be on that JLO report. I already done.
Which one? Total vacancy. Did you see this? Yeah. What? Yeah. What's red has to be.
Not blue, not blue,
Black.
yellow,
Yellow.
or gold. Actually, if you want to make it black,
Definitely yours was all black.
if you want to do black, what?
What color was yours?
Mine was like that dark blue, but that's because my color scheme was blue. Just do black. Black will be nice.
How's that going to report? In the drive?
Whoa, what's happening
Just
here?
drop it in the Google Drive.
What?
Like how you have the,
How long did you edit that? Yeah.
No. So like that, this can all be done here. You got to figure it out. I know it's like you have to click the lines. Damn, that's why we need Cassidy. Cassidy was perfect. Cassidy figured it out. I don't know how to do that actually, but if you guys can figure it out, that'd be great. What am I paying you to do here?
When I find it, like I produce the open stuff, I just hit.
That's it. Market close, right? Market close at 3. I think I just won the market watch competition.
Of the PowerPoint.
I was killing it today. Killing, dude. I finished at like 11%.
up 11%.
What?
That's up 11%.
Yeah. Let's see here. Unless it tanked like last minute. I checked like an hour. Of course, it's not loading. You're gonna be like, yo, bro, I think you lost. I started yelling. That's not what I planned.
Yeah, even on my spy was down negative 0.06%. So it's flat.
Okay. Well, how much am I up? Because last time I checked, I was up like 2.5. Oh, you can't. Oh, you
I'm
can't.
just looking at like the spy.
Okay. Oh my god. Oh my god. Am I looking at a red chart?
You said I could do it on me.
Oh, you mean, oh, I thought you were talking about the chart. I thought you,
How are you gonna?
at the table. No, okay. I think, oh wait, did you do it? Why is it coming out so grainy? I just try to do it on Word. Word might be, but actually this isn't bad here.
Like that guy there?
It's not terrible. Try Word. If Word isn't any better than this, then just leave it. That black.
You put it on Word and then bring it back.
Yeah, that may be best. Orange here, and then how do I? Order way. Oh, I think I see how you do it. It's easy. Just leave it black then, you know, that one you had it before. Or even that gray, whatever's the least grainy. I'll delete it for you. Nah, yeah, it's just it falls out of the scheme for the slide. So let's just do whatever you had. It was like that dark gray. I think I felt like that was the. Yeah, let's leave it like that. That'll do. And then just drag it over to the side over here. I'm gonna say orange. Oh man. Yeah, we're just oh no, you're good, dude. We're gonna keep working on our IC memo here. So like what we were doing last time. What we have going right now, just a little recap, probably everyone needs to hear this anyway. So our strategy, right, is that the building is under leased, right? So that there's a risk, right? We're going into this property that we're gonna lose value. Not that we're losing value, but that our baseline's gonna be harder to reach because I mean, we're not collecting as much in rent. The way around that is though that well, we're gonna lease at the recommendation of Alex here, who said that the leases are happening more frequently, really just at a higher proportion, with smaller floor spaces, right? So I think the strategy that we're going with is we're gonna start cutting our units in half. We're gonna start leasing these spaces out, right? Of course, if we can find a large tenant, we'll take the large tenant, but our baseline, right, our standard is just gonna be half of a floor, under 10,000 feet, square feet. Feels healthy? We're on the same page here.
Was it like 17,000 square feet?
17,000.
I think it was.
That was our floor, 17,000. We cut that in half, that's 8. You're right. Awesome. So that's the strategy. If you just want to hop on a normal slide, just get on a slide. I don't care which one you're working on, fill it out. I have my example over in the drive. So if you just go in there, sort of just copy, you know, the only thing that I could stress is that you get the formatting to the T. The formatting needs to be, I mean, like beautiful. Formatting is, it's probably like the least important context wise, but most important in terms of whenever you're selling the damn pitch, you know, it's just like, I mean, you've been to class, right? And you've seen like an embarrassing presentation. It's like nothing's aligned. They just like throw like random pictures on the slide. I cringe when I see that. Like it just hurts me on the inside. Because it's like, oh man, like I can't take you serious after that. It really does matter, right? I was watching this TikTok. It's a TikTok, so just grant that, right? But it was from this girl that works at BCG, right? And she said like she's talking about like all her life, specs and all that, and she's just like, people ask me what I do, and my first answer is that I'm a PowerPoint artist. And I was like, oh wow, that's how she's making the big bucks right there. She's a PowerPoint artist. I was like, wow, I relate to that. I relate to that. She's paid a little more than I do. You know? But,
I might need access to the drive.
yeah, I could just
See the yellow, just right click?
if you need me to do it, I'll do it. What's happening? Okay, Alex, so what's that?
You wanna make sure this is like completely not colors and jazz,
What do you mean?
like can I snag a signing property for this picture of the.
I mean, you could throw in pictures. I mean, just, yeah, keep the colors, you know. It's okay if you have like a watermark on the picture when I'm not actually showing it there. Yeah, I mean, just throw it in there, we can work it out. Okay, but Alex, so what you have here under risks, this is like a market risk here, right? Which you can address in a mitigating factor. But so move that one down, what you have here, move it down like one cell. Your risk, your first risk here, that's you doing it, right?
Yeah.
Move it down one. So the opportunity to break up bigger office spaces, that's directly related to our office, right? So our office is down. I mean, what's that? 24%. We say we have 24% vacancy. What are we doing about it, right? No. You leave that there. That opportunity, that's perfect where it is. But under risk, that first cell should be, you know, one city is experiencing 24% vacancy.
One city.
Because yeah.
So Los Angeles, what's Los Angeles is 20%.
Yeah, no, you have that right, but we can address that. There's different factors for that.
Okay.
But our strategy doesn't affect the rest of the market. Our strategy affects our building, right? Yeah. So that one city boulevard, like you would just say like one city literally type in one city boulevard is experiencing 24% vacancy. That's it. It's that simple. Yeah, it's just the risk mitigating factors. They need to be like directly related, right? It's like, how are we addressing this? Right, what are we gonna say? So then, yeah, under like the orange in LA, right? We're gonna go ahead and say that, okay, well, this is an opportunity zone. It has it's growing out of vacancy. So we could just say our assumption is that the area is going to be doing better in the future, right? We can say like as LA, you know, over gentrifies, right? People are going to move to the suburbs. It's like a trend that's already been happening. We start throwing that in there, and then just say because of that, I mean that's opportunity. You know, it's property values are going to rise, and then leasing out space is going to be easier. The two things that drive value, you know. So we're good there. Let me go ahead and I'll keep on doing this thing. Sage, you were doing physical characteristics last time, right? Or were you doing physical characteristics? You
just
were?
did like the Google Earth of it.
No, I'm talking to Daniel.
No.
Okay, was it, who was it? Oh, you weren't here last time. Was it you, Sage, that you found the physical characteristics?
I believe I found some. I think I was working on. I was doing mostly formatting though, like the market.
Format.
analysis,
Okay,
kind of-
got you. Well, if you remember how to get to those physical characteristics, if you could just drop in some points here on that physical characteristics slide, that'd be great.
Did I miss the class? It's still just-
Oh, I mean, me and Cassidy stayed late and we like threw some stuff in. Yeah. Oh, are you not in yet? I thought you were. Do you mind coming up here and typing in your email? Yeah, and Sage, you could just copy what I have, or copy my layout from my example in the drive. What? Oh, the risk. Well, let's think of them. What else is risky about this property? And we could be saying, right, it's like there's the whole movement towards not at home or the virtual.
Oh yeah, I told you.
It's like there's like a virtual movement, right? So it's like there may be presently less demand, right? And it's sort of related to COVID. It's like that's the real risk right here, because we know that COVID's actually going through like a little spike right now. Globally, is like we're experiencing higher numbers. I know, what is it? Hong Kong is under, not Hong Kong, Shenzhen is under lockdown right now. It's like one of the largest cities under lockdown. So we talk about, okay, well, I mean, what's our outlook on COVID? What are we doing to minimize that risk? It's like, okay, well, the city no longer mandates masks, the city no longer mandates hand sanitizer, but maybe we can put those in. Well, I don't know about masks, I don't know if we can kill that law or kill whatever that regulation is, but we could leave our hand sanitizer everywhere, corners. What else can we do? We could still leave our signs up. We can say, the little stickers that you would see on the ground, like, just keep 6 feet apart. We can still, implement contactless, certain measures, right? So there's actually one that I experienced in my last office, right? Is they had contactless means of getting to your actual office, right? Because obviously you walk in through the lobby, and then from the lobby, you need to make it up to, whatever floor you're on. So you got to think about how many things are you touching, right? You're touching the door. You're touching, you may shake the hand of the greeter, right? Whenever you make it through the gate, the security gate, right? You got to place your ID on the scanner, right? So that's the third thing you touch. You go to the elevator, you press the buttons on or you press the button to open the elevator. You press the buttons inside the elevator. You get out. You open the door to your office. So imagine all those things, like how can we automate that? So that's what my building did. There's one where they had an automatic door to get in, right? The security guard, well, he did not shake your hand. The gate, right, was related. It was a contactless means through your ID. So it already knew who you were as soon as you came in through the building. As soon as you stand in the gate, it opened because it sensed it was like an RFID scanner, something like that. So the gate automatically opens. You don't touch it. And get this, as you're walking through the gate, it knows where your office is because it's linked to your profile. So it opens up the elevator for you and takes you to your floor without touching anything. That's pretty neat. It is. That, and then of course, automatic door for your office. So you can implement these things, okay, you know, COVID may not be an issue for us, but so we can market our property, we're still contacting. But it wasn't the company, it was the building, right? It was like the owner of the building was the one that implemented the thing. Of course, you know, we also did it, you know, most large companies. I mean, think about it, it's a risk. How can they, the way we're explaining it to each other right now is how the company literally explained it to its investor. Like, this is how we're avoiding the entire situation. Deep down, do we really care about the people's health? Of course we do. Also care about collecting rent, right? Collecting rent, you know, this is one of those things, this health. This may boost our ability to collect. Okay, so, yeah, we can, COVID, right? COVID's a big one.
Physical, right? You don't care about.
Yeah, I mean, here, I'll pull up my example here. It's like, think about like what the how the building was built, like literally. All right, so like whatever. Here, let me pull this over here. How much is how much of the building is rentable, right? Like, what's your NRA? That's physical characteristic, right? Think about like, oh, parking spaces. We already have how many parking spaces, right? So we throw the parking spaces in. We're going to talk about the actual construction, right? The construction itself is, well, you could say, I mean, I don't know. I don't know too much about construction, but I'm sure you can just like read it. Like if you look up like the building's history, you'll say constructed in XYZ, whatever. This one that I was working on here was wood post framing, wood plank, sheathed deck roof, right? The second building, concrete tilt up, glued laminate wood beam. I do know about glued laminate wood because, well, test class. Is there some CLTs? Are we talking about what else? What's the other one? CLTs and what? I forgot the other one. Oh man, we had a quiz on that too. Yeah. Yeah, I don't remember. That was like our first quiz. To be fair, I don't remember. Are we talking about how what about a steel frame, cross brace steel frame? Yeah, these kind of things, you know, they're existent. They're part of the building. It's probably written down somewhere. I'm not going to press you too much on it. The investors don't really care. You know, it's like, does the building stand? Yes. All right. We'll call it even.
Just to go over everything that's already on the other slide. Because all this information on slide 4.
Say that again.
I guess not. Navigable area, asset class. So you have that listed on slide 4. What you want more of.
What I'm confused. Like what slide are you?
You were talking about like. I don't. Whatever it's called, I don't know how it's called. This building is not listed here. So
I'm sure, like literally look up One City Boulevard. Like just look up like.
I'm on their website. It's got everything.
Really?
Yeah, actually, the website.
There has to be some, like, it has to be somewhere. I mean, if you can't find it, I'm not gonna press.
I mean, I can go into the county records and try to go out there.
No, it should be online somewhere. I did it recently. I was just curious about the building that I'll be in Chicago. And I mean, like literally in like 5 Google searches, I was able to find out how it was built. We should put the year it was built in there too. Year built, year renovated. That reminds me, that's another risk, right? Another risk is that the building's old. And it was only renovated, what, like 20 years ago?
Really?
Yeah, so you could say, well, the risk is, I mean, you have like physical risk, right? Building's old, that's not appealing to tenants, right? I mean, I know if I'm, an up and coming business and I can afford to be in a building like this, I don't want to be in an old unit. I want to be in something fancy, right? So, maybe something to consider, right?
Money into it and.
Putting money, yeah, you could say like CapEx projects are due, some CapEx projects. If we renovate the building again, that's another strategy right there, another revenue.
Lobby exterior amenities summer 2021.
What's that?
Usually remodeled lobby and exterior amenities summer of 2021.
Okay, well, that's lobby, exterior. We can talk about the actual units. We could actually throw the units in there. TI. Offices don't typically have that big of TI, right? And the TI is what? I mean, what's your TI? Think about it. For an office.
Well, they use it to build it out, right? But if they have a specific tenant wants a certain floor plan, such as, knocked down.
I mean, really, like a traditional office, which is what this is there's offices and there's cubicles. Right? Cubicles, remember in Teskey's class, remember what the deal with cubicles is that you can take those in, move them, rearrange them however you like. So that's cheap TI right there. The only thing I could think of is that if it's a law office, that's really the only office that needs like a genuine TI. Maybe like a research center, maybe a medical office. Even then, I mean, it's like, all right, the equipment's theirs. They may use the TI to like literally just haul the equipment into the building. But as far as the floor plan goes itself, it's gonna be pretty similar.
You're absolutely right. It's a class A building.
Yeah, but it's still.
I'm so used to cheap people who don't want to pay for like this. You're like, don't paint the walls, let them do it.
We've got a budget. We got the big boy budgets. We got that institutional budget. Institutional, that's right. Right, okay. So I think you're on to something there. This was Cassidy's bio here. I like it a lot. I'm gonna read it out. Don't tell her I did. One City Boulevard in Orange County, California is a rare opportunity to acquire a 4-star office building in a bustling metro shopping area. I don't know what bustling means. In a bussin'. We should do a BUSSIN. In a bussin' metro area. The project boasts preeminent visibility. I like that. A sleek design and a compelling location next to the outlets at Orange County Shopping Center, accompanied by immediate access to Garden Grove Freeway. I like it. I like it a lot. There's a lot of emphasis. There's a lot of emotion in there.
That shopping center is.
It's actually like it is in this building is like it's in the shopping center.
So I wasn't sure if I should put it in the physical characteristics or not, if that fit.
Yeah, you can throw it in there. I mean, it's like a geographical feature.
Yeah.
Yeah, definitely. It is in a shopping center. What are we doing on risk? Very nice. COVID hybrid work. There we go. Very nice. Very nice. Keep up with this.
It's like a long term.
How are we feeling? Still good? Progress? Yeah. It got really quiet. I was starting to get nervous. For risk mitigating factors. That's perfect, man. Almost perfect. What am I looking at right here? I'm looking at a goddamn unformatted. What is this? Is that silly? Is that Arial?
What are you using?
EB Garamond. EB Garamond is, I mean, I want to take it up. I want gray lines. I heard you were successful in your application
For
the select.
Oh, yeah.
Congratulations. How was that interview? I was wondering.
Just like, questions on a resume.
Really?
Yeah.
Did they get technical? I didn't think they were.
No.
It's funny. Wait, so you met Adrian, right?
Yeah.
He's a pretty cool guy.
Thanks.
He's really cool. I don't know about the other two guys. I've only really met him once, but
We only one other guy.
really, oh, okay. It was Adrian. Was it Isaac or was it?
Drew? No, it wasn't Drew. No. Something with the D. Drew.
I forgot the other guy's name, but I know which one you're talking about. Kind of like a, yeah. He was that white guy.
Yeah.
Yeah, that's him. That's him. Yeah. Oh man, I forgot his name. I had his name in the chat somewhere.
Pretty sure something with the D. Yeah.
Of course, his name in my chat is just his phone number. I don't know his name. Oh man, yeah, I forgot his name. It's all right. It'll come up eventually. Getting factors. Let's go. I'm gonna bold these here. Let's go ahead and paint these our color. White, and how did I do it over here? It's a pretty sick table right there, isn't it? That's how you build a table right there, sir.
That color, that's it.
Hey, man. Don't give it enough credit. You don't give it enough credit. What?
I'm at least still trying to find out like what's this nest, when it's built up.
What is built up?
You know, like whoever.
I mean, don't stress over it. Like,
No, I'm just stressing out. Like,
yeah, no, I know what you mean. Yes, that happens. That and then, oh man, I forgot. The most important part is you got to tag your work. Conversion to life science space. I was like, it was all looking really good. I started reading. I was like, hold up. Oh, okay, that's not terrible. Just be like possible Residential, yeah, possible, we'll just say residential conversion opportunities.
Saying,
Real life, that's probably not a good solution, but we're just gonna throw it in there. Fill some space. Man, this table's really satisfying me right now. Really liking this table. Yes, sir.
there's no opportunity to increase rents through renovation.
What do you mean? There's always an opportunity to increase rent. What?
I found the video, they walked through the building, that's just fucking crazy.
Is it nice?
It's done, it's done. Oh, here's what you want. Yeah, honestly, that's why I got really cracked, I was like, I'm like, this is not.
Okay,
This is
so
like
if it looks nice, it looks nice.
Like, this is how the envelope looks, I can't touch this. Everything's.
I believe you. Honestly, we'll leave it in there.
Yeah.
We'll leave it in.
That's not just waiting.
Maybe we renovate it in 5 years.
Yeah. Like,
Maybe we renovate it in some years, you know?
oh wait, under.
Why don't we won't say renovation, we'll say CapEx projects.
What I was gonna say was, it looks like there might be an opportunity to have a additional income through parking, but I don't have the CCNR for the entire place, so I can't.
That's fine, we could do that.
Still asterisk.
Yo, I got a way cooler photo for the aerial.
That we're on there.
And for this other one, like shade.
Is that called, common area? like-
Maintenance.
It's a common place where like you cannot work at your desk, but you're still in the office, but you're getting sunlight.
Co-working space.
Co-working space, there's also co-working space. This one characteristic, that's like a big pro, I guess. According to-
Yes, sir. Throw it in there. So we only want half of this slide with information. The other half, we could just put a picture.
Oh, yeah, I was just going to shoot on the right side.
Oh, okay, I got you. Yeah, I mean, if y'all just, I mean, literally just like throw it all right here, we get a nice pretty picture right here. And I think that'll be enough for this slide. Yeah, this is not a vital slide. Let's see, I mean, what else can we throw in there? I'm not gonna expect you guys to do the financials, so we'll just skip financials or sensitivity analysis. I'm not gonna try to teach that right now. Oh, well, I guess we could do financing and sources. Who thinks they're brave enough to build a pro forma?
I'll do it. Let me use a restroom.
He goes to the restroom, never comes back.
That might happen.
We only got like 15 minutes, so I may
This is really good.
do it. It's gonna be, I mean, this is gonna be like fictional numbers. I don't care. I'll start it though.
So you have to.
We're trying to do that.
Huh?
So you have a.
I'm just gonna hold on here.
I use the XMPV, so that's not an issue. But on NPV, it's not really NPV, it's the present value.
Yes, sir. Pleasure running this class.
1969, 1999.
It was built in 69, renovated in 99. And then you said renovated again in 21. So we could do 69, 99, 21. What slide is that on? Oh, your bill.
Yeah. Here's the renovations listed on the school calculations as well. What pictures?
I'm gonna create can you add me to the drive so that I can just create a new pro forma sheet on that?
What I'm thinking is just, you may want to do it on Excel. Just do it on Excel and then literally just fabricate some numbers that end up at a 5 cap.
Okay.
Right, so 5% of the 100 million at 5 million annual, right? So actually, you're not even doing a pro forma. You're just doing a sources, right? It's just a sources initial investment sort of rundown. So if you just look at the numbers that I have there and all those metrics, just sort of.
Where? Which one?
If you go to my other example,
Yeah, I never got second up.
it's on the drive.
Like I said, I'm not on the drive.
I keep thinking you're on the drive. I know I've said that like 5 times and forgot. I'm so sorry. Yeah, what's your Resendez Business 99?
Yeah.
I'm gonna send it to you again.
I see. Okay.
You want me to recreate the financing sources and uses page?
Yeah, and I mean it literally put anything in there.
So you want me to create this whole like metric to the right of it?
Yeah. I mean, just if you could just, I mean, can you copy that text? I don't know if you copy that text or not. Yeah, I mean, like, I don't care about the numbers, just like make it just seem logical. I think that goes towards purchase price. So purchase price of 100 million, right? Just make the bottom line equal like 106 or 7 million, right?
Proceeds, that's the, like, how much they're putting out.
Yeah. It's like how much are we borrowing? Like straight up.
In future loan proceeds, that means you're gonna, fund? No cost or something?
Well, what you're looking at is in assemblage, remember? So it's not, that's gonna be different than like what we're doing. Ours is just gonna be like one state. You know, there's no project involved.
Right, so keep future loan proceeds out.
Yeah.
Initial.
Yeah, just like just make it, recourse, non-recourse, prepayment fee, none. Rate, literally used every number that I have here. Except loan to cost and loan amount, which I will work on right now. So I'm gonna be LP on this deal. FSC campus is us here today, but Drewco is the real contributor. I'm going with it. Sounds better than Drew Cap. Drew Cap? I'm going with Drew Cap. Okay, and then our loan assumptions, use this. Remember the ones we created like 3 weeks ago that have just stayed up. Yes, sir.
So what did you, tell me again what you want me to do? Want me to get rid of-
Literally copy this. Copy it. And honestly, leave out PLF. Just do per square foot. So if you just fabricate all the total numbers here, divide it by our square foot, which is 800 and, or no, I forgot what our total square foot is, but it's on one of the earlier slides. Just divide it by every single thing by that, you're there. That, and then you just get a percent in terms of percent of the total. Then, yeah, I mean, it's that easy.
Leave out which one?
You're gonna leave out future loan proceeds. You're only gonna have initial equity, and yeah, and that's it. You could probably, I don't know, just like throw something in for additional equity. It's probably for us.
So no capital reserves?
No, you do need capital reserves. That just has to be just like a percentage of. Right. So I mean, how much are we taking out again? I totally forgot. Purchase price is at 100 mil. We're gonna say total loan value because with like closing costs and everything, we're just gonna say 103.4 mil, right? And then so all you got to do is make that bottom line here equal 103. So I don't care how you do this.
All right,
We said
why is it better on Excel than the?
so that it does the math for you. You don't have to do it yourself. You'll save like 5 minutes.
I'm trying to copy and paste in the account.
It's a picture. I think it's a picture. That's why.
Okay, all right.
I think it's a picture.
No, I started typing up the Excel. I listed it.
That's why.
And then I was like, I copied on the Excel and I pasted it.
Oh yeah. Yeah, no, that would be how you fix that. Yeah, 70 LTV. We said at 3. Forget about that interest rate. We're just going to use the interest rate that's already on our example. We're going to say a 25-year term and what? And yeah, I don't know. Just set a little bit aside. Oh yeah, our initial equity, right? So instead of future loan proceeds, what you're going to say is contributed equity and equity from LP, right? So I don't know, we can just come up with random numbers. We'll just say of the 70, let's just say Drewco contributes 60, so 60 million comes from Drewco, 10 million comes from, no, it takes that. The bank provides 70 million, 30 million comes from, 20 million comes from Drewco, 10% is contributed equity. So we're just going to say 20 million is for the LP. And this is contributed. Easy as that. Oh, I got class in 2 minutes, dude. All right, I do have to go, but I'm gonna task you guys with staying as long as you want to finish as much as you want. And if somebody, actually, I'll go ahead. I'm gonna turn all this off. I ask that you guys just turn off your computers whenever.
Oh, shut down?
or log off, whatever you guys. Yeah, thank you.
Okay, for now, I'll just start class.
I'm here.
Anyways, welcome to Resisting Censorship with Blockchain Tech Class 6. Last week I wasn't able to be here due to some homework I had to finish up, unfortunately. But I'm here this week just to attempt to make up for it. Anyways, I'll read a disclaimer. All information shown in this class is not intended to provide personal, tax, nor financial advice. This information presented is intended to be consumed and only used for educational purposes only. I am not an investment advisor nor am I a tax advisor. I'm still a college student. And please consider your own personal circumstances, speak with professional advisors, independently research any data and information you may rely on, whether for making an investment or tax decision or otherwise. Anyways, be smart with these kind of things. Anyways, I'll do this at the end of the class, the attendance. I'll briefly go over the blockchain terminology like I usually do. As you know, with Bitcoin, Ethereum, Dogecoin, Litecoin, Monero, etc. Roughly, there are blockchain tokens that are deeply decentralized and open source, typically. And the goal is to enable the common man, but realistically is always a tech-savvy internet dweller who uses the crypto to be able to, without the need of intermediaries such as a bank, conduct transactions between two parties. The blockchain network utilizes a public ledger comprised of various wallet addresses. There's the private address and there's a public address. Always keep the private address to yourself. This P2P or peer-to-peer style transactions via individual wallet addresses characterizes most of the cryptocurrency transactions today. And I'll briefly go over the NFT is, what exactly it is. And NFT stands for non-fungible token. Non-fungible means that a token cannot be duplicated, replicated, or replaced, unlike a fungible token, which is other cryptocurrencies. Most crypto tokens like Bitcoin are fungible, which means they can be duplicated, replicated to a certain degree. Every NFT is unique to each other, and every NFT token is different. Thus allowing NFTs to represent original artworks, collectibles, such as digital trading cards, music and videos, or JPEGs, as everyone knows them as. The way NFTs are built, which allows them to flourish in the world of digitalized art. Modern NFTs are based on the Ethereum blockchain, but Solera blockchain is becoming popular too. Ethereum is special in that they hold additional data or information about a particular token, particularly called smart contracts in Ethereum. You heard, if you hang around to people who talk about Ethereum, you hear the term smart contract a lot, which allows for verification of ownership, history of ownership, and prices and additional data on the NFTs. It's a great invention. Yeah, I shared this last semester is how everyone seems to be hating NFTs, and they still do hate NFTs. What more can I ask? It's like, I read an anecdotal story about someone who was a famous artist who's offered a chance to create an NFT collection of his artwork, but he refused to do so. He publicly said so because he believes NFT is a terrible business model. That's an anecdotal I heard of, though. Fortunately, NFTs are still unpopular, basically. Okay. Back on. As you can see right here, there's a lot of jokes and tweets on it. And the crypto.com arena, it's still pretty popular. It's retained the names to this point right now, so it's permanently called crypto.com arena.
So who owns crypto.com?
I believe it's an exchange in Singapore. It's a the company in Singapore that officially owns it.
Somebody making an exchange.
Yeah, you
And
can.
one name. So it's usually a bad sign, right? If you haven't ran anything.
So far, at least, the arena's still named and the crypto.com still going. So I'm not sure if you saw it, but it was like a commercial with Matt Damon. We basically advertised crypto.com.
Oh. I don't have a TV, so. Oh, I didn't know you named the arena for a certain amount of time. Wow, that's it.
It'll last at least 20 years.
Wow.
Very good form of advertising. Oh,
That's the first arena that I've seen .com in the name as well.
see if the video works now. The last semester didn't work, but hopefully I fixed it. It'll probably work much better.
DApp is the abbreviated term for decentralized application. Just as any developer can build apps for the App Store on Apple's iOS operating system, developers can also build on top of Ethereum's blockchain infrastructure. To the end user, a DApp might not look and feel any different than other apps you use today. However, dApps are powered by the blockchain, and this makes them different and perhaps far superior. Here's what you need to know. A dApp's front-end code and user interface can be written in any language that can make calls to its back-end. Its back-end code runs on a decentralized peer-to-peer network like Ethereum, and all records of the application's operations are stored on a blockchain. In most cases, the entire code base is open source. This means other people can access the code and build on top of it, but no one person owns the application, meaning they are free to be used, improved, and built on top of by anyone in the community. Finally, the collection of users of the dApps are free to govern themselves. This concept is called autonomy. Running dApps on the blockchain also offers added security benefits. Since the transactions are distributed and encrypted across the Ethereum blockchain, there is no central place for a hacker to breach and gain access. Ethereum is perhaps the best platform for building dApps. Thanks to its very own language, Solidity, this enables developers to form smart contracts using the Ethereum virtual machine. Using these tools, developers have created dApps with use cases ranging from prediction markets to resource planning. One example of a dApp already up and running is ETHLance. ETHLance is a completely decentralized job market whereby freelancers can find work and employers can find workers. Since it is powered by the Ethereum blockchain, apart from gas fees, it is completely free to use.
Covered this in last class regarding the front end and back end, so I'll kind of skip.
Wow. So
I'll briefly explain a bit more about dApps like the video did. The audio was a bit shaky. I'm not sure if you was able to hear it. But essentially, dApp or decentralized app is an application built on a decentralized network that combines a useful front-end user interface with a smart contract or a program that runs on Ethereum or the form of blockchain. On the Ethereum version, smart contracts are accessible and transparent, like an open API. So a dApp can include smart contracts that other people have made just easily build on each other. There's some advantages of it. There's zero downtime. Once smart contracts deployed and on a blockchain, the network as a whole will always be able to serve clients looking to interact with the contract. Malicious actors, therefore, cannot easily launch denial of service attacks or DDoS attacks, or DDoSing, as well known as targeted attacks toward individual dApps. And privacy, you need to provide real-world things to deploy, interact with the dApp. Resistance to censorship, So it's the reason my class is here. Is no single entry on the network can block users from submitting transactions, deploying DApps, or reading data from the blockchain. Complete data integrity. Data stored in the blockchain is immutable and indisputable. Thanks to cryptogenic primitives and malicious actors cannot forward transactions or the data that has already been made public. And trustless computation and verifiable behavior. Smart contracts can be analyzed and are guaranteed to execute in predictable ways without the need to trust a central authority. This is not true in traditional models. For example, when we use online banking systems, we must trust that financial institutions do not misuse our financial data, tap our records, or get hacked. And it's a lot of advantages I've read off, but there's also a lot of disadvantages that you do have to consider. For example, the maintenance, DApps can be hard to maintain because the code and data published to the blockchain are hard to modify. It's very hard for developers to make updates to their DApps or the underlying data supported by DApp once they're deployed. Even bugs or security risks are identified in the old version. Yeah, it's open source, but it's hard to modify. Performance overhead. There is a huge performance overhead. Scaling is really very difficult to do, despite I mentioned earlier that it's possible to scale. Achieve the level of security, integrity, transparency, and reliability that Ethereum aspires to. Every node has to run and store every transaction. On top of this, proof of work takes as well. And the back of envelope calculations booked overhead is something about 1,000,000 times that of standard computation on currently. I think it's one of the reasons people make a big deal about the ecological impact of blockchain tech. Just stuff like this, and they kind of just freak out and go like, oh, global warming. It's kind of a knee-jerk reaction. Network conjugation. There is one DApp. When one DApp uses too much computational resources, the entire network gets backed up. Currently, the network can only process about 10 to 50 transactions per second. The transactions are being sent faster than this. The pool of unconfirmed transactions can quickly balloon. And user experience, it may be hard to engineer user-friendly experiences because the awkward end user might find it difficult to use, set up a tool stack necessary to interact with the blockchain in a truly secure fashion. That's a run-on sentence. Careful of this article. And centralization. User-friendly, developer-friendly solutions built on top of the base layer of Ethereum might end up looking like centralized services anyways. For example, such services may store keys or sensitive information server side to serve front end using a centralized server or run important business logic on a centralized server before writing to the blockchain. Centralization basically eliminates all the advantages of the blockchain or traditional model. I mean, if you're going to centralize, why bother with the blockchain? It defeats the whole purpose. Might as well just go traditional. And I briefly covered this in DEO's Decentralized Autonomous Organization. Should mention that where I got the pictures from Token Economy by Sherman Volger, May 2019. Apparently, excerpts are available on blockchainhub.net. It's where you can easily find those. It's how I originally found these images in the first place. It's very good. I still don't understand those sigils that the guy put here in a traditional top-down organization graphic, but it's other than that, it's good. I think I believe it's the last class I have to do for the semester. That's correct. Yes. Anyways, as draw my conclusion of this class, what to remember about DApps, decentralized or DOs, and NFTs. At most, these concepts are in an early stage. DApps have applications now, but they are entirely mainstream nor established any major websites so far. And there aren't any established DOs either. Last semester, this might have been the case, but there's kind of an established DO with the Ukraine invasion, and everyone's trying to easily donate crypto to the Ukrainian government. I think that's the only DEO example I can think of that recently appeared. And however, as a proof of concept, you should use these concepts and try to apply them to protect your privacy and anonymity on the digital and physical world. I mean, they're a tool. Remember that. They're not magical. It's not magic. It's scientific tools. They're inventions. They're made by man and they're can be undone by man. But they're very useful tools. They can basically you can avoid intermediaries that track your data and seek decentralization, potentially bypass censorship with the technology and with the concepts within the blockchain. It's a form of resisting censorship overall, if you apply it correctly. I'll read this quote again. I kind of put it in the last class, but I want to read it again. By definition, private blockchains are not truly open. They provide control and leverage to a select number of individuals. A truly open blockchain, a public one, will always be a semi-decentralized one. Why? Because the more decentralized, the better. Because less control over users is better. And because a network of various counterparties can grow faster as industry participants change. Finally, privacy and security. In an era rarely a week goes by without news from a major data breach, the single best way to safeguard process integrity is on a public blockchain. Once a fully decentralized blockchain protects against a single point of failure, private blockchains are as good as the weakest link. This is from Matthew spoke on a Forbes article regarding private blockchains were a good start, but they are not the future. I'll end it with that. Here's citations I used for this PowerPoint, in which this Hacker Noon article, which originally inspired us to this PowerPoints. Here's the front and back end explanation YouTube video. And here's the video that explains what DApp is. Unfortunately, I played it with bad audio when I ripped it from the video and put it to here. You can just watch the YouTube video here. Here's the introduction to DApps from the ethereum.org website. Here is Twitter accounts that I originally got these images from, where I was talking about NFTs. And here's the article that discusses a lot more about the crypto.com arena. It is conversion from becoming Staples centers to crypto.com. I got it I put it in an archive website, so I believe there's a paywall from it. So just, if you want to go to the original article, you have to go through a paywall. So I just ripped it and put it in the archive website.
So what was Staples? Was Staples
Staples was originally the names of the arena.
yeah, but
Was
it Staples like the store Staples?
Oh yeah, stores. They bought a naming contract, but then crypto.com bought them out.
So we got last week. I think we're pretty close to done, aren't we?
I think so. This is what I had from, but I don't remember what it like. I just remember you said we'll finish it next week. whatever we had left over to finish, like we were gonna, because we did the H model.
Oh, we didn't finish these one. Okay.
I think we well.
Yeah, let's get in there. Seems about at the exact same spots. I can't remember who's doing what. Oh, we didn't do H model. Okay. So, bring up the relevant value one as well.
This one, or the one you sent to. It's.
Share it.
Oh, okay. Like that? This part? Right? We were doing the part. Okay.
Yeah. All right, let's add something to this one. So if you come over to the left, far left. Let's try PE and EV this. Tell you what we could do is add 2 rows at 5 and 6. So just click on 5 and 6 and add some.
Below, or was it below?
There you
or-
go, that's good.
Oh, okay.
All right, so let me show you what we're gonna try here. So over in B5, do equal percentile. Parentheses and highlight that 268 all the way down. Hit your F4 twice. Comma, make that 0.8. Hit there. Copy that to B6 and C, just blend all of that area. Towards the next 2 columns.
But,
And change row 6 instead of 0.8, make that 0.2. You can copy it over here, just change the other.
FSLR.
Right, sorry. So let's just go with the industry one. So over in D, well, parentheses, go over to the 1.49 divided by 1.04 up above, and no, B2, let's see.
Oh, wait, oh, B3.
I'm sorry, B3. Close parentheses. 74.43, that's the current price.
74 point.
0.43. So today, change that to a comma or something. Or today they be trying, if there was trading where they have historically 80% of the time or 20% of the time they would be at 106. Now go down to the next line. You can't copy everything, but I mean you might be able to if you put your edit.
Oh, but it wasn't, I need a.
No, that's good. You can edit it actually. You'll just need to change B4 to B3. So that one was right.
Oh, yeah.
No.
Oh, no.
The other one was right. That one's B4 should be B3. You want it to be, I don't even know what it is now. So you want it to be B6 divided by B3.
B6.
Yeah, you're off.
Oh, yeah.
So they could be trading anywhere from 38 to 106. Now copy all of that you just did. So B5 through D. Control C, copy. Put that in G5. What range is much wider on a. Pretty wide. That may not be helpful. Can you go to the right? Let's see if one of the other ones just kind of cursor to the right. Let's look at the price of book one. Let's copy what you did in G, copy it over to K. I think K might make more sense. I'm sorry, L. L.
No. Oh.
Right. Yeah, that looks a little more reasonable. Okay. Why don't you copy that? We'll see that. Take it over to your other file and paste values.
Okay. Oh, it's all you meant like copy.
Yeah.
See, okay, hold on. I put it there. I don't know
Make those, it's 177 and the 152. Why don't you make those dollar amounts?
oh,
172. Not the others, but those two. Make them, yeah, the others can just be columns. Go back and get the PE one as well. The other file. Thought here is we want to understand the stock. So let's go over and build. We're going to do the football chart.
Oh,
Right? This
yeah.
will be the last thing we'll do. So go over like the G23 or something. Let's just put all the data down that we have. We're off to the right. All right, let's start with the 52 week range. Call it 52 week range. And L20 whatever. Oh my
You scared me.
God. Are you a finance major or are you an actuarial major? I don't recognize you. I'm trying to. My brother was a mascot.
I was not expecting anybody to walk
No,
in.
I didn't even see him until he was right next to me. All right, so go over to like L20, whatever, next to that 52 week. So put a 0 there. And then next to that, put 61.24 over 2 columns. And O, not P, but an O. Go over back to
Oh,
O.
okay.
Put 123.13. You see what I'm doing here in a second. All right, come down to the next one and do your H model.
So just copying it or no?
No,
Oh, okay.
you'll probably reference it. So H model. Right, put 0 there. And M do equal C11. Columns equal D11. Come back over, we'll do PE ratio. 0, then equal to 38.26.
Oh, wait, no.
It's C37.
Oh.
All right, so the way we're going to do this chart is in N, go up to N22. You're going to do equal the number in O, I'm sorry, N23, sorry. Equal what's in N,
And
that equals that 123.13.
oh, uh-huh.
minus the 61.24. This is how, I don't know if you've ever done a football chart before.
No, you told me about it last time, like
Yeah,
the
it's
setup.
pretty easy to do. You just highlight the L, all the zeros, all the way over to the end. And go over to the bar charts. On that, you see which one we want. You want the 2D, the middle 2D one. That one, yeah, that's what you want. Click on that. And then click on the oranges, because what we're going to do, the oranges don't make any sense. So we just click on those and right click. Yeah, on the field, click on the field up on the top.
Oh, okay.
Yeah, and change that to no field. And you click on the outline and do no outline. Yeah, perfect. You got it. Click out of it.
Oh, okay.
And so
okay.
now you can see this is your ranges. Now the current stock is, all right, so we're gonna put a line where the current stock is. So what you can do, well, let's see. 91. Go to O24 and copy that to the right.
Is the next column?
Yeah, just next column. We're just going to put it there temporarily. You'll see in a second what I'm doing. And then in O and on where the 91 is, click on that. The one with the arrows around it, the ants around it. Make it 74.43. Just type that. Now, what you're going to do is click on your chart, and go up to the insert shapes. Pick just the line, that second one. Yeah, click on that. What you want is to draw the line so it's right along that third bar down. So go over to the chart. Going up and down.
This one?
That's the 74.43 is the current price. So see where that is, not that one, the third one down. The one you just did, the 74.43, not that one.
Sorry, so you meant the vertical ones, or no?
Yeah, right to the left. See where that gray box ends?
This part?
Yeah, you want to do a line that exact, because that's where the current price is.
Right
So
here.
You just need to draw a line there. Yeah, all the way up and down, the top of the chart. So you'll have to expand down the bottom. All right, about there is good. Expand it down. All right, so now you can go back. Now what we got to do is figure out what our target price is. Each model shows go back to the other file. There's two numbers we still need. So below that 3826. Yeah, my word, the current and the boy. See how the median and the current are almost identical. So go up one cell. I'm just curious. 74.40. All right, so down below that, do equal. Parentheses 3 divided by C3 close parentheses times 74.43. Copy that over to your price to book. Copy that.
Oh, but it used those.
Yeah, that's right.
Oh, okay.
So copy that 7415 and the other one, well, those two numbers over to your other model. You have to do it one at a time.
Where should I?
Put it in B12.
No.
And B13. So what I want to do is take the average of those three, the 52, the 74, and the 77, take the average of those three. Right, so 6788. All right, so go over to 024. Type 6788. I'm going to add another line right next to that blue one. You can click on the blue one and copy and paste it if you want to. You can find it. No, you got the whole chart.
Oh.
Won't let you. You have to
Oh,
look out of it.
no, I'll just make a new one. Like a new insert.
Well, I don't know. Maybe you can just add another line if you want.
Yeah.
Easier.
But I'm gonna put it like in that little where it ends now.
Line it up right on that.
Mhm.
And you can go with that. Go back to 020, whatever that was. Copy the 91 back over. If you copied it, don't cut it. Yeah. Now have your first ever football chart.
Ooh.
So the ranges are what you think it's worth, and it's pretty wide. Your target price is the first blue line. You might want to change it to green or something. The second line, yeah, maybe make it color. Doesn't look like the other one. So that one's your target price. The next one's the current price.
Yeah.
And so what you have here is you have a stock that's slightly overpriced, but has tremendous upside if you look at it. So your target's slightly below. Your target's 67.88, and the stock's currently going for 74. So it's a little bit expensive. However, if you look at your charts, there's a lot of upside. So even though you think the stock's only worth 68, the downside's much smaller than the upside. So you have to decide what that means for your buy or sell recommendations. You've got, you can clean it up. I think we looked at some football stock charts on Google or
Yes.
wherever. You can look at them and kind of clean them up a little bit. But the next thing you can do, if you click, actually right click on it and do select data, right click on the chart. But you have to click on it just right somehow without the line being clicked. Okay, select data. And then over on the right where it says edit, click on that and highlight the 52-week H model PE, highlight those 4 cells. No, the actual titles.
Oh, okay.
Over on NK, 820, whatever that is. That whole, those 4 things, all 4. No, just the titles.
Oh, just the title. You mean this
Yeah,
part? Okay.
Yeah, you're setting up your titles. There you go, and say okay. See how that, set it up and say okay. So, yeah, you got it. Your price to book. Oh no, it moved it though. So now you're gonna have to, your lines moved. That's the frustration with the lines. So you'll have to redo your lines, but you saw how you did that, right? You got 74, 43, and 68. So you'll just have to go back and do that again. Sorry. So there's 74, 43, and 67, 88.
We had it here. Oh no, yeah, here we had the average.
Yeah, if you want to do that one, just move that orange one over.
So.
74 for you. Enough in line with lines and all that kind of stuff.
The orange line was to.
That's your target price. That's what you think it's worth. You lose the current price. Look at some online. Chart stocks. I find the previous one. I think the very first one up there. They call it valuation football field. I wouldn't call it that. Might call it, yeah, FSLR valuation scenarios or something. I have to, down to the take rules. But you're doing scenarios, right? Or valuation ranges, or whatever you want to call it.
I like that.
And you might clean up your titles in K, so you have, maybe all caps or something. I mean, use caps. And so if you go back over the K, you can just type in there.
Oh, okay, that's like fixing it here.
You might even do 52 hyphen week.
Is it? Will they change it? Yeah. Oh, okay. Yeah. It does.
Yeah, I might just. There you might call it price. Well, why don't you do PB ratio? I'm scared to do it because it's going to move your. That's good. Yeah. I think it's upside down. I would have the 52 on top, so you have to kind of do it the opposite order that you want, but I like it. I think it works. Yeah, that's a good looking chart. Now on the series, you don't need that legend at all. There's just no legend. Obviously, the bottom's the bottom and the top's the top.
We can delete it then.
Yeah.
Oh, is it moving stuff around? Is it moving the lines around again?
Well, you haven't put the 91 back.
Oh, okay, that's true. That's true.
And the ones I'm looking at, they start at 0. You could change, but if you change the range, it messes up your lines. But it looks like all the ones I'm seeing start. Well, there's one that starts at 50. If you're doing Google, you'd probably start at 2,000 or something. Starting at 0 for a stock like this probably makes sense. Yeah, that's perfect. Yeah, really good. Well, I didn't think we could do that in one session, but no, you got it. So be careful when you move.
Oh.
Control Z. I don't know if you selected the 2 lines, if you can group it. You might try. I don't think you can group them.
What do you mean group? Like group?
We'll click on both lines with the chart and right click. See if they have a grouping function.
Oh,
see
group.
Off of it and see if you move it. Now if you move it, does it? I mean, not those, but if you move the entire chart, does it move them with it? Yeah, there you go. To fix them, you have to ungroup, but just like they're not lined up right now. So if you want to line them up, you ungroup, you line them up, and then you group again. Then whenever you move it, it won't mess it up.
Let me see. So if I ungrouped it right now.
Select one. You should be able to use your arrow key up and down. That might be easier, but just be real careful. Try your up and down arrow. See if that works. Oh, that just moves it. No, sorry.
I just wanted to make it a little shorter, but
Look perfect because then I can tell if it's 74 or 73. You're just kind of giving it a general sense. But yeah, so make sure to regroup it before you move it, or else it's going to really get frustrating. There's probably a way to get that line in there, and there's probably a video that shows you how to do that. I just don't like the combined charts, where you do bar with a line. I just think it's really. Sure you say that. No, we got through the whole semester. I would probably say this is a hold to a week buy. I don't want to sell on this. It does look a little expensive, but this is one that has a lot of upside. Look, terribly overpriced, and it could be terribly underpriced if they're definitely in the right industry. That's the growth industry. You can change the colors of your bars if you don't like the gray. That you can do without messing up the lines. Does FSLR have a color? Come up first. So
I think it looks red.
looks like they're red. Yeah, they're red. If you look at their trademark, the trademark is red. No outline. Yeah, that makes more sense.
Could you still see like the lines though? Or should I change them?
Well, you have to ungroup and then move them. Just make sure you don't, if you ungroup, make sure you don't do anything else before you work with the lines. You can make the lines like, most of them have them like dotted versus solid.
But it's making me choose both at the same time.
Yeah, something like that.
Mm.
And then you could make them dotted but wider.
Oh,
so
okay.
they show up a little bit better. Click on it, it should. Well, don't do that. Do format object.
Oh.
Format object gives you more choices. You see on the width, you can make the width like 1.5. Maybe.
Oh, like that?
Oh, that looks good right there, 125. Yeah.
But how did
Change the color because we had it in there. But I don't think you can change the color one without changing the color both of them. So you have to do one at a
there.
time. Oh, wow, that worked. You did it. All right.
So now
Yeah,
it's yellow.
it's looking better and better every time.
So that first line, it was the one it was the average price, right? Or how did it change?
Well, it's our target price, but we got our target price by taking the average of those three.
Oh,
each
okay,
model,
okay.
PV and the price of those.
So it would be the 6788, right?
Yeah, 67.88. Yeah. 74.
7443. Okay. So I can remember that as well.
Football chart. I first started seeing it in the CFA research competition probably about 4 years ago. So I don't think it's been around that long. I just haven't seen it here. For a football field on the chart, that seems strange to me. One that has 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. That's a little much. Very good semester. I learned a lot in your Excel class. So it looks like you got something. You could probably use a football chart like this in some of your graduate classes. They'd be impressed.
Yeah, no, yesterday I couldn't, like right now, like I was like, I have to come, but yesterday I was like, I didn't want to come like in the condition that I was, with like, I can breathe and everything, but I have like, it's my sore throat. And I already took like all the exams and everything. And it looks like it's just allergies.
Yeah, it hit me pretty bad 2 or so weeks ago.
Yeah, you think that it would be as bad, as rainy as it's been, I think the rain would reduce some. I'm seeing the mosquitoes, that I definitely. Flies, oh man, I had a fly in my house. You know, I was in bed asleep, he was flying around my head, I was like, I gotta kill this guy, it's the last thing I did. All right. What did we get last week?
I think
Did you do a football chart last week?
no, I think we were about to. So,
Well, that's what she did tonight, so it's possible to do it.
uh,
Tell me anything, wow, congrats.
Yeah.
Who's president?
president is Anna, vice president is Anthony.
Okay.
And then,
Yeah, I thought Oscola's was, the fact that he hasn't been up here, that really.
yeah, it kind of hurt his presentation because but it seemed like, it was pretty much just like, I'm gonna be in person next semester, which is pretty much, he just rose up to par and then everybody else was talking about like what they were gonna do.
Yeah.
And so it was kind of.
He did a great job, but yeah, not being on campus.
It was a
worry
great
about that.
position.
Yeah.
And then market outlook is Juan Carlos.
Oh, yeah.
Economist is Alex Montague. Carlos did a good presentation as well.
Well, Juan Carlos killed it, I believe, on Hayes.
Yeah.
He has some big shoes to fill.
And then I won M&As. I was the only one to run.
Oh, really?
I
Oh,
won
that's
the
strange.
one-person election. And then chair is Andrew. For vice president, I thought he did a good job running, but and social or marketing director, I don't remember if it's going, but he didn't even have to run, and so he just rose up.
Who wasn't the guy from last time?
No, Brennan is actually going to UT.
Okay, so there's. Might have been this.
Well, we had two Brennans, and I'm not sure, I think the
Yeah,
other one was the social chair.
Yeah, that we had Brendan was social.
She wasn't at the meeting,
Okay.
so I don't know.
I didn't hear it from the Zoom yesterday who won. Like it was just I heard like the voting, but I never
Yeah,
found
no,
out
we
who
were supposed to
won.
make a LinkedIn post, but
I heard like you were gonna do pictures at the end.
we did take pictures.
Oh, okay.
We're gonna do pictures next week too. All right, thanks. Yeah, it's good semester. Things you can put on your resume.
I'm gonna already know. But I was like, it's already too late.
Yeah, it's too late, yeah. Facebook, buy it today.
What happened?
Well, the whole stock market is off, so
Okay.
it's some of it's residual from Netflix and this interest rates, although interest rates. Like, no, they did go up quite a bit today, so I saw.
Okay. Share that screen. I want to move it over to the other side. Just because.
Your relative value one?
I think this is,
It's already in there.
it's
Yeah,
in,
yeah, okay, so you've already got it. All right, so go to your output and we'll create some numbers here. So you're doing Facebook, so the obvious one would be PE ratio, EV to EBITDA. Boy, they look cheap everywhere. So maybe add 2 rows at 5 and 6. Or here. So what you want to do in B5 is percentile. Well, I actually typed the word percentile.
oh,
It's a great formula.
just, which one?
Just percentile with nothing else. It's like the 7/30th one down. Yeah. Click on the 334 and 9.
I was looking for C34.
Control shift down.
That was left.
Oh, we gotta get rid of those. Hit escape. Let's get out of there. Come down until you get to the 2022. Come all the way down to the bottom of that. We gotta get rid of those extra rows. It's really irritating. All right, so click on that very last 28. Okay, you can do control shift down. Control shift right a bunch of times, just forever and ever and ever. Do it very, very end. And then hit your delete key. Just, yeah, that's fine. Now go back up to the top, control home. Down to your percentile. Okay.
Then we were doing,
Wise. Let's do the 0.8, the 80th percentile. This is the most, since it's high end ratio. Right, do it. You can copy that down.
yeah,
Yeah, just one, and then make it the 0.2.
oh,
I
okay.
think they're going to be cheap even with the 0.2, but we'll see. No, they've been much cheaper than that. All right, so in C, we're going to get some valuations here. So we'll do equal. You'll see what we're doing once we do the math. So do equal over parentheses. You click on the 615. 5.
Okay.
C3. No, they are really cheap. My word, this is ridiculous. But C3 close parentheses times 188.07, where they fell below 100. On the next one, boy, they're really cheap. You're dealing with a really stock that's going to have a really wide range, so that's fine. All right, on the next row, you want to do the same thing, but now with a minimum. So in C,
Just do a new one or,
well, C6, I would go down below.
oh, okay.
Equal parentheses, the 1.12 by the 0.81. Go up to it. Times 188.07. About 220 or something, 0.07.
0.07.
Yeah, their current price. That one, yeah, 260. So you're saying, based on history, they should be trading for at least 261, which makes some sense because they've been about 300 for so long.
What are we right now? 188? Was that the,
188,
you were
yeah,
saying?
so really cheap. All right, so you can copy B5 through, no, one more. So they're equal. This
We're
is
at?
the median, below that one, below the 261, they're equal, open parentheses, go up to B3, 51, divided by the 0.81 again. And then go up to it. Today, and they may not even be, we maybe should update it again, but close parentheses times 188.7. P today. Oh, so I bet these numbers are probably even lower. I bet their current even below 0.81. All right, so now you can copy B5 through C7. Go over to the right and find, I'm sorry, come over to the right and find that E that,
Right here.
and then so paste it in Q. Over to the right and see if that's stretched. Not as stretched on the upside, but it's more stretched at the median. All right, so you do want those three numbers. You want that 725, 183, and 458. You do want to copy those. Them on your next page. Just paste them somewhere.
Like over here?
Values.
Yeah.
Yeah. Copy. Don't close out of that. You just lost your formula. This case, like 40 times. There you go. Yeah, you lost your formula. Control Z one more time. Still lost your formula. Where is your formula?
Oh, no, I went too far. What's the button to go back? There we go. Now they are.
Okay, yeah, so take those three numbers and paste those values on the next page somewhere. Like that. Back into the same thing with the PE ratio.
I did this in the year yesterday, but I like to do the
Well, you can have a while. I think it makes sense though. I think that's pretty much where they are. All right. So somewhere in an empty area, we'll do the football chart. Right there is fine. So let's start with the PV ratio. 5,000
Just over here somewhere?
PV ratio. PV. Start with PV.
What's the B stand for?
Oh, right. Oh, I'm sorry. EV, EBITDA. I'm sorry. We're doing PV over Triana. It's EBITDA ratio.
How do I spell EBITDA?
Yeah.
Okay.
And then DE ratio, the next line. Next line, come down the page. And then 5, or wherever you are. Next one is H model. 52 week high low. You could do 52 week. Yeah, 52 weeks probably.
Yeah, that's where Juan Carlos got me, because he'd already taken a bunch of finance courses, and so he had on his like secondary page like all the things he wanted to do to model stocks.
Oh.
And on my second page, I talked about the May and go away thing, but I didn't really mention that I knew how to model stocks because I don't really know.
Well,
So,
he has an advantage. He's in my
yeah. So at some point, maybe I'll have that in my bag and then
Oh, yeah, next, you're taking finance this next semester.
I'm taking the first finance next semester, and then I'm gonna take your principles of investment and risk management the semester after.
Yeah, so that investment class will be cheaper.
Yeah.
All right, so in 04, just type 4 zeros in a column. 0, 0, 0. No, I mean, sorry, 0, 0, and the next row 0, next row 0.
Oh, okay, fair enough.
Come down the page.
Oh, you want to go down? Yep.
You'll see.
My
in a
bad.
second. There it is. 0, 0, 0. The next one on the EBITDA do equal. So on P4 do equal. Go over to I3, click on that 183. And then R4. Well, there, if you want to do that one, that's fine, then go down to the 260, the 261, 30.
Okay.
Each model do equal and do the 314, 420. Week is 185.58. Just type it in. All right, and then now go over, actually not, go back up to the top. If you're not going to go over to Q, you're going to go over to R.
R5?
4.
4.
4, yeah. And then you equal, go over to I2, the top of your EBITDA. Same thing with PE equals that. Okay, what is that?
Oh, okay.
Long equals the 657. And 52 week is 384.33. Oh no, it's actually quite a bit above your. Okay, and then what you do is in Q, go up to Q4. In Q4, you can do equal R4 minus E4.
Oh, where did it go?
Copy that down. This is everything we need. I tell you what,
Do labels?
No, you won't need labels. Your labels you can use are going to be in here. You'll see the labels across. It's going to be just kind of obvious from the chart.
Okay, I get it.
But what we want to do though is let's figure out what's the average of down in P. Parentheses. Go over to I4 plus I12 plus E10. Plus your I4.
Uh-oh.
Or your yeah.
That was a double plus as well.
Yeah. Next row, put 188.07. The next row. I tell you what, take that 497 and cut it over, do Control X, and put it over in R. Control X, and put it over in R. Sit here.
Do what?
Yeah, hit enter. And in P, put 188.07. Yeah, that's 0.07. Copy your formula down in Q.
This one? Yeah.
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 Yeah, okay. So now we're ready. So highlight, you can put 0 and O, that last O down there. Highlight O, 4 through Q, whatever. Highlight those 3 columns. Not R, yeah. And then insert. Go over to the bar graphs. Just from that arrow down, not down there. You go down just 2D bar, down one more, and go to the second one. There, right there. There you got it. Good. Click on the orange ones.
Like,
Yeah, right click. You want to change the fill to the top to no fill. Change the outline to no outline. Got it. And then right click on the chart and just select data. On that edit on the right, not that one, right there. Yeah. Go over and highlight your titles, that the EBITDA and those. You can go
all the way
down one more if you want to do it. All right, good. Say okay. So, the only reason we have that top line on there is to get your 2 lines. All right. So the left bar. So what you want to do is do insert.
maybe,
I tell you what, let's change the colors. So
sure.
Facebook is blue. So why don't you click on your bars, all your bars. And right click for the fill, give it a blue that's similar to Facebook's. Yeah, I mean, same thing on the outline, just move the outline, no outline, but yeah. Now you're gonna put some lines in there. So the lines, so do an insert. Up at the top, right? So
Okay.
insert.
Yeah.
And then do shapes, open left, and then just click on the line, or that one there, that's fine. And have a line lined up to that top bar on the left.
This one.
Yeah, the very far left of that bar. So close to get it to right on the little. Yeah.
We'll, yeah.
It won't
Okay.
let you move it. You have to- And with the arrows would be easier, but it doesn't let you. Might be able to move the whole 9 line. Doesn't have to be absolutely perfect, but it needs to be. All right.
Think
Then
so.
you're gonna add another one on the right side. You might do a different color on that one.
Oh, yeah.
There's a way to do this with the graph itself. So I've never. Problem is, anytime you move the chart, it's gonna mess it up. So
Yeah.
I'll show you what we can do there. So you might right click on it and do format. Format object at the very bottom. Why don't you change the width to 1.25? And then the dash style, I'm gonna make it dash. Yeah, that's fine. And then the color, whatever color you want it to be, but something other than the same color as your chart.
Black?
Black or red or green or something, black's fine. So that's your target price. That's a different color as well.
Different from black?
Yeah, different from black.
Red, sure.
That's fine.
Danger, bad.
All right, so now click your chart on those 2 lines. Actually, go down to your legend first. Just get rid of your legend. You don't need your legend at all down the bottom.
Oh, well, that messed
So
up my
now-
lines.
Yeah, it messes up the lines. So you may want to fix the lines and not mess it up one more time.
It's all
Right,
good.
so now let's see if you went up to click on the chart, Select data. And forward to Q7. See if we just make that
Here?
7 up in the top, very top chart range. We don't want that line 7 anymore. Yeah, we don't want line 8 anymore. See, okay, see, oh, perfect. I think. Why is it? No, Control Z out of that. I don't think that didn't work. Is it possible that, oh, it is, our current price is right at the 52-week low. So no, that was right, that worked. Can you front correct?
How did you go?
The arrow to the right.
Oh, okay. There's no button for it. There's not like a Control Z. There's not like a reverse Control Z.
No, there probably is, but I'm not. All right, I think that's perfect.
Where's
Yeah, all
Jason?
right, so now you clicked it. Now you might have to ask.
Oh, Jason, the guy who does Excel right before Tableau, he won treasurer as well. I guess I didn't say that.
Oh,
He almost won VP. There was a tie.
oh, wow.
Yeah.
Wow, great. Who else is running for? Aren't you running for treasurer? No, oh, Anthony was running for treasurer.
Yeah, but he won VP. So
Okay, yeah, the last thing to do is click on the chart and on the 2 lines. So you want to select everything. Click. But make sure you have the 2 lines. So when you right click, you might have to right click when you're over one of the 2 lines. Nope, it didn't work. Right click again. You make sure you have that.
I bet
Click over one of the dots of the lines.
I don't know.
Yeah, Triana was able to do the group. She was able to.
Well,
Well, the only problem is every time you move the chart, those lines are gonna get off.
Yeah.
You don't want that. So just don't move it, leave it where it is, but it's gonna become a.
part of me wants to see if I could go and make this a Tableau, but probably could. Maybe.
Yeah, I don't know how it, yeah, it's having,
Oh, I know exactly how I would make it. So
yeah, I don't think Excel, boy, you can combine a line chart with a bar chart, but you have to really, I mean, you've seen the one where the Fed does, where they have the gray area for the recessions.
Yeah, but-
I've been tempted to look at their Excel to see how they do that.
I could make that in Tableau. I'm pretty
Yeah.
sure.
Well, you see what it's supposed to look like, and you still have the numbers for what that is, so it's the 188 and the 497 is where you want it to be. It doesn't look like it's at 497 though, so that doesn't right place. So it looks like the line is in the wrong. Well, there's something wrong with them. '88. Something wrong, just a second. Something wrong on the end there. Plus 188.7 plus 198.75. Yeah, what's wrong with Q? 875? What's wrong with that formula? Up, down, one more.
This one? Oh,
Ah, all right.
Okay.
All right, so that's why it's not right. Okay, copy. Yeah, I think you cut it down instead of copied it down. So, yeah. All right, there we go. Ah, so you have to redo your lines anyway. So right click and select data. You have to get off the line, select data, and then change the 7 back to 8. Oops, wait.
Oh.
Wait, controls, can't cancel.
Yeah.
Cancel.
Nope. 8.
Yeah, now.
Now get rid of the blue ones.
Control Z, yeah, that messed up. Start over again. Boy, that messed up everything. Yeah, I think you're gonna be stuck with that. You're gonna have to do it.
Yeah, I'll get rid of the balloons again, or
Yeah.
I guess they're now blue. That's weird.
Can't delete them, I don't think. I think you have to change the colors. I think you need to delete.
Oh,
them.
yeah.
It actually moves the chart. It was all blue.
This
Right on the end, yeah.
data, edit,
That's me.
like so.
We're using the blue, but
Fail, that,
Oh, we should have done that first, yeah.
software. Well, it's not on my, I can show you what I.
So now you can change it back to 7. Data.
It gives us like.
No, it's not.
change that.
So that's what we're doing.
Sure why it didn't do that. It should, doesn't have them selected.
Thought I had them
I
selected.
thought you had it though.
Yeah, I have it selected.
You might right click and just get the, go back over and just right click on it.
I think I did the outside of the,
Yeah, that's kind of the downside of using that. Okay, right click, just go back to the chart. You just right click on them. And then right click there and.
Oh, yeah.
That's the easier way and then the outline the same way. All right.
oh, now we have a blue outline. Kind of brings it all together.
All right, so if you want to, you can do select data again and get rid of the last line. And that.
Why is it?
Why don't you come down on the edit where it shows 52 weeks? If you had it, go back down there,
Okay.
select data. On the right, where it has the check marks, come down and uncheck the very last one, not that one, 52 weeks.
Yeah.
Yeah, okay. I think you got it. I still don't understand why you can't group. You might try grouping one last time.
And then the Bloomberg gives you more information, but I just don't know if that works.
Yeah, we're just.
Right over one of the dots.
The biggest part now is.
Yeah, right. I don't know what Triana did different from what you're doing. It looks like it's exactly the same.
Yeah.
That's what the chart's supposed to look like. So if you look at that, I mean, this is an obvious buy, strong buy. The current stock is about as low as it can be relative to everything else. So I think she called it. Didn't it one word? I think she
Oh, yeah.
called it valuation.
Actually, it's meta now.
Oh, that's right. I think she called it valuation ranges or
I
something.
put the link in the box.
Cool.
That looks pretty good there, actually.
I think the lines are a bit. It's all good.
So we think it's worth its 52-week high. And it's got a lot of upside, especially on a PE ratio basis.
Yeah, it's more than double, right?
It doesn't have any downside. The current price is kind of
Downside.
its worst case scenario. Yeah, this is about as strong a buy as you can get. All right, save it. You got it. Boy, you did it faster than Triana did. I think I'm getting good practice going through.